Let's do this real quick. I'm gonna take my screen off so that I can take a look at this. Chandler, if you could put me full screen here. I'm just going to give you a little bit of context to what we're going to do for the next hour. This is going to be really good content. If you're somebody who is, you've been trading for a while, you're looking for some seriously good and experienced mentors to listen up to. These are your guys. We've got Chris Pulver and Gary. Many of you guys might remember Gary. He's come on to the show many times in the past. It's been a minute, and he's back today. So we're going to be doing a trading battle. And first of all, what is a trading battle? A trading battle is it's an event for charity where two traders go head to head and they place in the market live trades during our session here. They're going to be going up head to head, and they're going to be trading everything from FX to stocks to whatever they want to trade. We're going to be jumping into that here in just a moment. And the profits of this event, if there are profits between either the trader, whoever generates the most profit, that amount is going to go to the charity of the winner's selection. The trading battle is one of the coolest things in the trading community, in my personal opinion, and the opinion of many other people. And today we're going to be doing a joint show with the trading battle. I am so thrilled to do this. And again, we've got Gary and Chris on the line. They're going to be joining here in just a moment. As we jump into this session, I just want to drop a link here in the chat. We've got the Trading Battles YouTube channel link. Do me a favor, if you're a fan of the channel, help us out. This is a joint partnership. We're trying to get this type of content more out into the community. We're going to drop a link right here. Click this link. Please go subscribe to the Trading Battle on YouTube and watch this show starting now. They should be streaming over there. So let's get into this. We're going to do a quick, intro video, and then I'm going to tell you about some of the charities. We're going to introduce Gary and Chris. It's going to be good. So here comes the intro battle for Trading Battle number 6. All right, guys, and we are starting Trading Battle number 6. I'm so excited for this. What we're going to do is we're going to just go ahead and jump into this. We're going to be introducing our two traders who are going to be going head to head and fighting for charity, which is just the coolest thing ever. Our first contender, our first fighter in this battle is going to be Chris. Chris Pulver is somebody who has been on the channel for a while. And if you've never seen Chris before, he is, well, here's his note card. He's the founder and CIO of Streamwise Capital, senior analyst at Market Traders Institution, 20 years of experience in the markets. And he trades everything from stocks to FX to options. And I got to say, from a personal standpoint of knowing Chris, he specializes in volatility. So real quick, let's go ahead and introduce Chris Pulver.
Hey, Nick. How we doing, everybody? Happy Trading Battle. It's going to be a wild one. Let's go.
Chris, we turned the tides because last time you were the host, and now we flipped the script. I'm the host. You're the battler. And I want to get right into this. We got so much stuff to get into. So I'm going to go ahead and introduce our second guest. But before we do that, really quick, Chris, you are fighting today for your charity, Kitty Crusade. Tell us about Kitty Crusade. Why Kitty Crusade? Are you a cat dad?
I'm not a cat dad, but I went and saw, it's a local charity firsthand that I saw what they are doing. Things that I didn't know about. I mean, there's humane shelters and animal societies all over Salt Lake City, and I actually went to an event hosted by Kitty Crusade, and I had no idea that stray cats can have 20 litters over the course of a couple of years, and so controlling that population, and they have a dedicated team for properly trapping, releasing, feeding, caring, vet bills. I mean, they do amazing things. And so I'm not a cat dad, and I'd say I'm like 95% dog person, but seeing what they do firsthand, it's like they need all the help they can get, just like all these other animal shelters. So it's a great cause, and I was happy to be seeing what they do firsthand. So they're a great a great purpose for me to be trading for today.
Very cool. All right, so we've got our second contender here. We're going to be talking and bringing in Mr. Gary Fitchard, who has been on the show before. It's been a minute, so let's go ahead and we'll bring him in. But while we do that, let me just give you his scorecard as well. So Gary, in terms of past history on just the A1 Trading YouTube channel, he's been on here and hung out with us many times in the past. But here's a little bit about Gary. Gary is the founder and CEO of Traders Network Club. He has 30 plus years of market experience. He's been on our show many, many times. He specializes in everything from Fibonacci, candlesticks, wave patterns, and much more. And I'm very excited to have him back and say hello to my good friend, Gary. Hey, Gary, how are you?
I'm doing well, Chris and Nick. Appreciate you guys. Good to be here and looking forward to this battle, man.
Yeah, it's going to be fun. It's going to be fun. And also just to touch up on your charity, you've got Kitty Up Ranch. Tell me real quick, what's the choice behind Kitty Up Ranch? Why is that your charity that you're fighting for today?
Absolutely. This is actually very close to our heart because it's not only people that we care about, but of course it's family friends that we've got to know throughout the years, and we just love what they do for the special needs kids, and they have all these animals, specifically horses, and that they use to be able to do therapy with these special needs kids, and it's just wonders how. I love animals, but I tell you something, it's just amazing how animals change the sort of the personality in each of these children. So it's all for the good. So they're doing a great job. They're supporting the community with that as well. So we're pretty happy to support them.
Awesome. Well, guys, we've got a very exciting next hour or so here with Jerome Powell taking the stand about an hour and a half, but the federal funds decision coming out in just 54 minutes to go here. I want to go ahead and jump into the charts because we've got 3 challenges today. And remember, the rules are pretty simple. Whoever makes the most profit, that profit gets donated to charity. It's one of the coolest things on the YouTube, I would say, for traders. And you guys are in for a treat, audience, because, the trading battle brings in together talent from all over the world. And Chris and Gary are going to be some great people to listen and learn from. So let's go ahead and jump into it. You guys both have your charts loaded up. And before we jump into the first challenge, I just want to kind of reiterate again, we've got an environment where the question now is the Fed going to stay higher for longer? And are we going to see rates not go down this year? Or are they even going to talk about rate hikes, or is a rate cut still on kind of the table here for this year? Gary, I want to ask you first. Has this market for you in your trading, and feel free we'll show your charts on the screen here for a second. What have you been watching? How have you been trading the markets here recently with all of the volatility?
You know what, Chris, I always say there's only one way to eat an elephant, and not that everyone wants to eat an elephant, but there's only one way to go ahead and eat piece by piece out of this market, and that is to chase after small profits. When I first started trading many, many years ago, and yes, I'm old, but when I started trading, it was good for long-term trends. Now, in today's market, there's so many news and so many factors that are being considered, and it's so difficult to stick into a good long trend unless you're chasing the JPY and you're in the wrong direction. But it's like, there are such great opportunities short term that we can take advantage of. And to be honest with you, for years now, we've been chasing after small profits in the day and raking up some good returns without exposing ourselves to all of this fundamental news that's coming up. I know that Boris has different opinions about whether fundamentals lead or technicals lead. Me personally, I'm a technical trader, and I believe technicals lead and fundamentals fulfill the structure.
Sure.
But then on the other end, you could also say that fundamentals help build up the structure. So it's a two-way sort of solution to it. But at the moment right now, short-term opportunities is absolutely a good way to be able to trade the markets right now and profit.
Yeah, absolutely. And I think that that's a fair take. You know, you've seen this market kind of really change its tone in the last few weeks, whether it be the S&P, the currency world. You know, the volatility is high, higher than it has been at least. And, you know, if you're able to catch those swings, there's some great profits that can be made for sure. Speaking of volatility, Chris, you're the volatility guy. Chris, you do a ton of options trading. Of course, you come on the show regularly. I want to ask your take. Is it similar to Gary, you know, how you're just conceptually approaching, because let's face it, there's been a paradigm shift from 2023, which was just this chugging upward trend on the S&P, the NASDAQ, et cetera, take your pick. The dollar was kind of back and forth last year. It was a much lower volatility year than what we've seen in the last, month. Kick back into gear as volatility is back, along with inflation fears, it seems like. So conceptually, high level, what's your approach to the markets right now?
Well, I think that today's FOMC will set the tone for the bigger dot plot and the bigger message delivered in June by the Fed. The fact that we're having a Fed meeting May 1st, as opposed to the third Wednesday of the month, this is going to be before we get additional inflation data for the month of April. And looking at the charts right here, this is my S&P on a 5-minute time frame. This is my opening bell range that I have from a 9:30 to 10:30 block off. You can see the price hasn't gone anywhere. So clearly the
Yep.
market is waiting, and it's going to be floodgates open. It could be, it could be a single direction type day, like we've typically see with FOMC. It's a lot of noise and a lot of volatility. So, it's going to be really interesting how Gary and I position for this. I'm sure that he's been thinking about it all week, as have I. So, I mean, we definitely want to have a plan to carve out some profits. I know that our deadline is end of day Friday. But for me, I've got some earnings plays this week. There's over 900 companies reporting earnings, so I have some plays that I've already taken profits on. I have plays that I've running until next Friday, not this Friday, so I don't have to, isolate my window so badly as far as time goes. But realistically, this is what I'm talking about. So the day right here, we have a high around 502, we have a low around 500. That's a $2 range, and we're looking at about an average of $6. Now, that means that in some way, shape, or form today, I'm looking at price to go probably another $4 lower or another $4 higher. Now, I truly don't know what direction. The trade that I have going on right now, that's just an intraday trade on the SPY, is I have a 501 long, I have a 500 long, and this is a long strangle. That's an options play where if price goes up or price goes down intraday, if I get a $4 move here or a $4 move here, I can turn that position into profit. I'm hoping that we have more than just a $4 move, and instead of just a $6 top or bottom, I'd like to see a $7 or $8 move from high to low today. That would give me opportunity to make a little bit more profit. But I paid about $3.40 for the trade. If it goes $4, I can still get 50 cents to 60 cents out of the trade. If all of a sudden we get a $7 or $8 move today, then I take a $3.50 debit, turn it into $4.50, $5.50, and make a few bucks today. So that's at least short term. We got a lot of trading ahead. And but you can just see, like, the market is clearly waiting. One thing I thought's interesting that we could chew on for a little bit here, fellas, is I think that Powell has been very calculated with all of his messaging. We saw a big shift this week in the CME watch tool. So the Fed watch tool, the rate cut probability is now all the way out to November, and the market hasn't quite acknowledged that we might only see one cut this year or zero. And I think that today's message, if Powell's going to come out and just explicitly say it, I think the market can absorb a little bad news now for the stability and the ability to price out, like, okay, when rate cuts do happen, maybe we can get a cleanse that's needed. I mean, Gary's a wave structure guy. And Gary, I'm curious if you see the same thing I do here. I'm looking for a 1, 2, 3 wave move on the indexes. So the SPX, the SPY, the NASDAQ, the Dow, I mean, all these indexes, to me, I'm looking for some type of ABC correction to pull back. But once we get into this area, way more bullish, moving forward. And I just think the market needs to have that cleanse. We need to check this rally that we've seen from October to now. And if we do that, I'm certainly more bullish going into retesting all-time highs than I am watching this market melt up, where we were at the beginning of the year, just wondering, is this market going to pull back? And here we are, 2-3 weeks of selling, and now we're wondering how low is it going to go and how bad is it going to get, when the reality is, I think it's just a technical correction that needs to play out.
Yeah. And if you go ahead and flip over to my chart, I can actually do it. I like the way you got your structure set up there, because on the Dow, I've got the Dow set up the same way. Got a 1, 2, 3, 4, 1, 2, 3, and looking for a 4 correction move. So we're in a rising wedge, and this rising wedge means that there is going to be some downside action in the Dow. Actually, we had this conversation in my live session this morning. our Dow session this morning, and we were actually talking about the dollar as well as the Dow. How it's set up. This is how the Dow is set up here, looking for a rising wedge, but looking for a corrective move first, a dip first before the next rally. And then if you go into the actual dollar, because that's the big elephant in the room right now, based on what the Fed's going to be doing today, we look at this right here, and it's a slight bit of a bullish channel is forming right here, also creating a pattern, and also created a five-way structure. And what we've got here is the market actually giving us a false break on the top here and coming back into structure. And this means that we're going to see a downside move in the Dow, in the dollar index. And so when we look at this, it's like both of them seem to be pointing in the same direction in some way. Both looking for a downside move. And so the question is, have we ever seen the Dow and the Dow and the dollar index move in the same direction? And yeah, we have. We have seen that happen before. So it's really tough to be able to define what the breakout's going to be in today's. But coming back to your question about whether the Fed's going to cut interest rates in this year, 1 or 0, I think I'm going to lean more towards 0. I think there's going to be conversation about, hey, there's this possibility, but I don't think it's going to happen. There's just, as you mentioned, Nick, in your show, that there's a really bottoming out of the inflation numbers. And with the inflation numbers bottoming out, they cannot really go ahead and start cutting interest rates. That's just it's going to boost the inflation back up again. So what they're going to do is they're going to hint at possible cuts, but they're not going to do that. And then what they're going to do is they're going to try and stand aside from raising interest rates, because it's going to put more pressure on the banking sector. And we know what happened last year when the interest rates were hiked so high and they were buying bonds at 2%. I mean, there was a completely, I don't know how they even got themselves into it. How does banks get themselves into that? Unless, of course, they were pressurized by the central banks, which I think it was the case, and that's why we're in this mess that we're in. So it's a lot of everything that has to be considered. But I don't think we're going to see some interest rate cuts or hikes very, very soon.
Yeah, it's going to be an interesting next couple hours here, because again, we're going to get some guidance from the Fed. As you mentioned, Gary, one thing you can say for sure is that they're going to, Jerome Powell specifically, is going to be complacent to both sides, right? Whether you think rate cuts are coming or not, he's going to say something. And usually you can walk away from a Fed meeting and everybody gets something that they wanted to hear. They say, we don't want to see the jobs market, fall apart, and we don't want to see inflation keep running. So it can be a little bit frustrating, but you guys broke down some technicals there. And Gary, I know you're a very technical trader. We've had many, and one thing I will say, the luxury here for me is that I've had a lot of chart time with both of you guys over the years. And so I know your styles. I know, for Chris, you are directional, but you're also very attuned into the volatility of where, things are at, and how likely is a big move or how likely is it not a big move. I know that's something we've discussed. And Gary, I know you're very good with your technicals, your directional biases, and scaling in and out of positions. So let's get into some of that positioning, because now as we get closer, I mean, this is the theme of the day, guys. In the audience, we're going to do something really exciting. And also for the sake of charity, we're going to be taking some extra risk here ahead of FOMC. We're going to be placing some trades. Let's go ahead and real quick, we're going to just do our challenge number 1. We're going to transition here, and I'm going to read that to you just after this. All right. So you saw the challenge. The challenge number 1 is to place a trade ahead of FOMC. Now, we're going to be placing a couple trades here today, but this is the broad scope challenge. So what I mean by this is that the first challenge here is that you can place a trade on whatever you'd like to trade. It can be an index. It can be a currency pair that you like. You can trade gold, whatever you are interested in trading here. Each one of you guys gets a chance to go through your trade. And again, you can place it. We're going to be using really quick. I just should mention to the audience, the brokerages or the brokerage that these guys are going to be placing their trades on is 8cap. 8cap is the featured broker here today. And you can actually trade directly on TradingView with 8cap. Big shout out to them. They've got an awesome integration directly with TradingView. So that's where all the trades are going to be placed. And of course, those profits, like we said at the beginning, any profits that do occur will be getting donated to the charity of these guys' selection. So let's go ahead and start with Gary, if you're good. Do you have a chart in mind that you are going to be placing a trade on here today?
I do.
All right.
And based on everything that's going on right now, I'm going to go to the crypto market and take a look and
Okay.
see at Ethereum, because I'm a big buyer on Ethereum. I'm a buy and hold trader. I don't spot trade this in and out. Or at least don't short term trade this in and out. But I do buy and hold, and so I've been watching Ethereum because I'm looking to add new positions. I've already added in at 3,000. I've said that the market gets down to 2,800, buying in at 2,800, buying into 2,200. So those are the two levels that I'm looking to buy back in again, because we haven't even taken out the top, the high of this run back in 2021. So I think there's a lot more potential to the upside. We've seen Bitcoin actually break through the highs from 2021, but we haven't seen Ethereum, and a lot of the altcoins as well haven't really taken off as strongly as what Bitcoin has. So I think there's potential. Now, like as you said, Nick, I'm a structured trader. I like to look at structure. I like to look and see how the markets are setting up. We've got a falling wedge formula right here, also known as a wolf wave pattern that's actually hasn't broken through that support level yet. So I might be getting in way too soon, but this is the reason why, and I know these trade battles put you in a position where you're not 100% comfortable with the entry levels because you don't want to enter right now. We've
Yep.
been told to enter at market, so I'm going to have to enter at market. But normally what I would do is I'd wait for the market to go ahead and test the bottom of the structure right here. This would be a buy. And then if we get a false break again and the market comes back in again, this is another buy right here. And this is more aggressive, the first buy. The second buy is more the add-on. And then we're looking for price to go ahead and chase after this target up here at the top. So I would be expecting price, based on the structure we have now, look for price to get to about 3,600. Now, that's not going to happen overnight. We've got a couple of days before this turns. But I'm going to get, because of the news that's happening right here, I'm going to lean, and I know you're more bullish on the dollar. I'm actually the opposite. I think the market is already priced in this rally that we're seeing based on what they anticipate to happen. Things could change with Powell today, and the market could go a little bit differently. But I'm looking at the structure on dollar index. I'm looking at other options, and I'm thinking that we're going to see a rally in Ethereum with the dollar weakness. So I am definitely a buyer. So I'm going to go ahead and throw in a buy on this.
Okay,
Let's do
perfect.
this.
Yeah, I wouldn't have. That wasn't my expectation from you, Gary. But that's what makes these trading battles fun. And also, as you mentioned, guys, the expiration on this trading battle is Friday, so we've only got a couple days here before this ends. And we're kind of having to be put on the spot to place trades. That's how these trading battles go. And remember, they are for fun and also for charity. So, also, Gary, I happen to know you typically do tend to average down or average into a position. So is there any chance that, you get filled here today, and maybe if it, drops a little bit, a couple percentage points, would you add to the trade potentially before Friday? Or are you thinking just one entry and where it goes, it goes?
Well, if we, I don't know, has the rules changed? Can we add in throughout the week?
I
Yes.
think so. If Chris is good with it, if you're,
Yeah.
yeah.
I mean, I say we can trade how we need to trade to generate the profits for charity by end of day Friday. So
I like
I'm good. I'm good with all of it.
I agree with that.
Well, in that case now, because my good friend Chris is a gambler, we're going to do that. Then I'm going to go ahead and throw in a buy here. It looks like they're not going to give me more than that. I'm going to have to drop it down. 6. Let's go. Let me see if I can do 10. All right, so I'm going to do, I think I can do 50. Yeah. I'm going to do 50 right now. I'm going to get in right now. I am going to, however, buy back down again. So that everyone know, I am, however, going to be buying back down. If the market tests this is going to be a third buy right here. Now, this is the daily time frame. So which means I'm not going to have a chance for the market to go through here and come back up again. But if it does come back to test that, I'll buy back in again here. But we won't have time to go ahead and look for that false breakout. So hopefully I got it right, and it's just a support test. And again, it's only 3 days, so I'm not really looking for price to go all the way up here to retest this target here, because 3,600 would probably be the upside target on this right here. But we're not going to get to that point. So what I'm going to do is I'm going to buy in these areas right here, and hopefully I get enough push between now and close Friday to be able to make some profit and win this competition and kick somebody's butt real solid.
Very, very good. Well, yeah. So, all right, Chris. So we've got Gary's first trade in, and he's been transparent about his game plan. He's going to look to add if the market does give him a bigger discount. Cool. He's locked in his first trade. He's long Ethereum. I guess it's up to Chris now. Chris, your turn. Trade any asset ahead of the Fed's interest rate decision here today. We've got about 36 minutes to go. So, what's your pick?
Well, first off, Gary, on Ethereum, you just gave me a great idea. I'm looking at trading some Ethereum futures, and I'm going to get some positions in my portfolio here, so I can collect $550 over the next 30 days if price stays above 2,300, which I'm pretty sure, based on what you're showing there with that falling wedge and what I see in the charts, I think that's a pretty safe play for the next 30 days. And also, if I have price fall into that 2,300 level, there's a potential that I can make a 10x profit on that as well. So I'm not going to place this for the trading battle because this is more options, but I'm going to do this in my broker platform. What I'm going to do is I'm going to take a little hedge approach on all this wild and crazy noise we have in the Japanese yen. So I know it's FOMC today. We have the Bank of Japan that has, gone off of negative interest rates to zero, essentially 0 to 0.10. We had this first intervention of 2024 that we saw, late 2022 as well. I still don't think this is the official turning of the tide and the unraveling of the carry trade. So what I'm looking at here is I'm going to hedge with some yen crosses. And so it's not just going to be one asset here, guys. It's going to be multiple. And so the screenshot that I have, this is the 2-week volatility of the yen crosses. This is the pound yen, the euro yen, the dollar yen, the Swiss yen. So what I'm going to do is I'm going to play some hedges here with the pound yen and the euro yen going opposite directions. I'm going to go pound yen long, euro yen short. And I'm going to see if I can have one winner outride the other one. And I'm going to go dollar yen. I'm going to take Gary's. So I still think dollar strength is going to prevail because the dollar is just the I keep saying the cleanest dirty shirt, or it's like the dirtiest. I don't know. It's like, I don't think other central banks are going to keep the same pause and pushing out the rate. I think other central banks are more likely to cut rates sooner than the dollar and the Fed. So anyway, I'm going to hedge on the pound yen, euro yen, and I'm going to pair the dollar yen, Swiss yen. I'd like to go long Swiss yen, and I'll go short dollar yen. So
Okay.
I just think there's enough liquidity in both of those. You can see that the ATRs are somewhat similar. The pound yen is clearly higher volatility. So I'm going to go long on the pound yen, and I'll go short on the euro yen. So I'm going to find some levels here. Let me find a trade size that feels comfortable. I'm going to try to go after like 200 pips of profit for 100 pip stop loss, or 300 pips of profit for 150 pip stop loss. I'm looking for a 2-to-1 on these trades. So I'm going to get these entered in right now. So let's go pound yen. Let's go long here. So trade, and these are going to be market orders. I'm going to look at so if we're at 196.76, if I did a take profit, let's go pips. Let's go after about 250 pips. Let's go after, we'll try 250. And lot wise, I think with our leverage and 8 cap, we can go one standard lot there. That would be my risk. Is that about right?
To the right.
I got to put a stop loss in. So 250. So I make about 1585 on the trade if I'm correct. If I cut off that pip stop loss around 125, I'm risking 792 to make 1585. That's long on the pound yen. So I'll try to make the trade size match where I'm looking at, I'm going to write this down, about 1600 to 792. So I can make these somewhat comparable. So I'm going to go long one lot on the pound yen, go 250 to 125. Let's go. So that's in. Now I'm going to go euro yen.
And while you place that, Chris, let me just give some context too to the audience. So Chris has a approach where he does a lot of options trading. And when we say he's trading volatility, for the new guys and girls in the audience, what that usually means is he's looking for, trying to call out whether or not the market is going to move a lot or the market is going to call out a little. And what Chris is essentially doing here is he's doing it not through options, but through placing inverse or opposite direction trades, both with tight stop losses, but expanded potential take profits. And what you're saying there, when you're betting long and short, but you put, higher risk to rewards or higher rewards relative to small risks, you're basically betting that something's going to move big on the yen in the next few days. So very interesting stuff there that Chris is putting together for us. He's showing us how even without options, he's still a volatility guy. He's showing, he's looking for moves in the yen. And I think that that's an interesting, approach as we get into what will likely be a very volatile period for that USD JPY specifically, but all, yen crosses. So I like it a lot. So Gary, you're long Ethereum. Chris is looking to set up kind of a hedge on the yen, hedge / looking for basically volatility to expand for him to make money in this situation. He wants something to move hard in one direction. So the one trade takes a small loss and the other one captures a big win. Is that a fair kind of overview of what you're doing, Chris?
That's fair. I'm just going to make sure I get the proper. So I'm doing a 250 pip take profit for a 125 stop. So it's roughly 1,600 for profit, 800 for risk, 2-to-1. And directions, again, if we want to specify, I'm going long the Swiss yen, short the dollar yen, long the pound yen, short the euro yen. And those trades are all in. So that's my one asset, just those four right there. And it's a hedge. And so hopefully the idea is one winner, one loser, cut the losers off quickly, let the winners run. And let's see what we end up with in the morning. So in the next 24 hours, hopefully overnight, we see some drama in the yen. If it goes nowhere, obviously I can assess the P&L overall, but I know we're also going to look at trading some stocks, and I'm also going to hedge on that too, Gary.
Yep, we're about to do our second comparison. Real quick before we do that, Chris, can you just show us your trades list and your trade panel there down below on your trading view, just so we can see the overview. So there we go. We got long Swiss yen, short dollar yen, short euro yen, long pound yen. Now, just to draw this up, also the losing scenario, you might say, well, why don't you just always do this? The losing scenario would be if the yen didn't move a whole lot and it just chopped back and forth. All trades could hit stop loss without ever hitting a take profit. But again, Chris is making a volatility based decision to say yen's likely to move big. One of these will hit, one of these will take a small loss. Cool. Very cool. We're up to date on everything. We've got our next challenge here. So real quick, let's roll the transition and jump into challenge number 2. So challenge number 2 is a sensitive topic right now because all stocks seem to be selling off recently. Challenge number 2 is we're going to be trading any U.S. stock, whether you're a Tesla fangirl or whether you love Amazon or what you love NEO. Well, you can't trade NEO. It's got to be a U.S. stock specifically. So let's go ahead and jump into this. We had Gary go first last time. Real quick, Chris, do you have a stock pick for us? And let me also clarify, does it have to be a buy or can you short a stock?
I think we can do either one because my plan was to do both. I wanted to short one, buy one, and try to play a hedge. So I was actually surprised. This is interesting.
Right back to the volatility, Chris. Let's do it.
That's right. That's right. And NVDA. So we all know NVIDIA. It's been one of the bigger storage stocks this year. So if I go to, I'll just go to this feed here for NVIDIA. Have some analysis on here. So I'm looking at the weekly trading range, and we're looking at about $90 on NVIDIA. One thing that was surprising is if you get into the semiconductor space, SMCI had earnings this week. It's down quite a bit. If I go into my semiconductor watch list here, let me go to semiconductors, drag this over here. These are some of the bigger plays. Day-to-day volatility, IV rank. If I go to, what's supposed to move the most? We have right now, where's my NVIDIA at? Do I have two? Let's go symbol.
Down there.
So I've got an 82.5 on the IV rank, and then SMCI. I guess I need to add that in here. I'm just curious what SMCI is. So I'll add that in there. All right. So that's a 40 rank. Interesting. So there's actually more implied volatility on NVIDIA. But yet, because we had earnings on SMCI this week, I think that's why we jumped up and we kind of changed the calculation on the week. Because so far for the week, we've had a high of 910 and a low of 700. We've already moved $210 on the week. this might have just spoiled my plan here. My initial idea was to consider going long on Nvidia and short on SMCI to continue with this downtrend. But now that I see that, man, this is a tough one. I feel like I should trade something a little bit less volatile. So Nvidia 821. Fudge it. I'll stick with the plan.
Does 8cap have SMCI? Double check that they've got
let
that
me
as
check and see if they have the feed here. So
CFD.
I'll go here. Yep, they should have it. SMCI. Let's go 8cap.
No,
They do not.
May
Nuts.
not
All
be
right,
an
so we have
option for you.
all right, NVDA. All right, so we've got NVIDIA
You might
here.
have AMD as well.
I was going to say AMD is another one I could do. There's MU as well. It's just a different stock price, but we have Micron in here, so I can play the semiconductor space.
Mm-hmm.
I think I'll do this. I'll go similar styles. Micron, AMD. I'll look at both of those instead of playing NVIDIA. So AMD just had earnings. I will look to see on the weekly chart here. We've had a decent pullback on AMD. Let's see here. All right, here's what I'm going to do. I'm going to take a buy trade on AMD, and I'm going to take a sell trade. NVIDIA just has way more volatility. Micron would be like half the trading range. All right, so I'll go long on AMD, but I will go short on Micron if I can. I don't know if I can go short, but let's find out. So create new order. If I do a market sell, and then I'll check my trade size here. If I did a 0.10, see if I set a price target here. If we get to, let's say, $100. Okay, so I could probably do a lot. I could do one standard lot here. All right, so I'll probably do half a lot on the stocks, maybe one standard lot. But let me go. Let's talk long first. So AMD, we just had earnings here. And the nice thing is Nick, last time you and I did the battle, it was during FOMC. So actually having the breather beforehand, we can prep for an hour and not be like, everything is going wild and the charts are all over the place. This is a little bit more calm.
Calm before the storm. Whatever
exactly.
you play trades on will be moving big time shortly after, which is fun.
So we had solid earnings. At least EPS was positive. They had a miss on revenue. Still, I mean, revenue trends. I mean, 5.47 billion. Compared to 6. I mean, that was a downside revenue on AMD, which is kind of interesting. 5.86 and then down to 5.47. I mean, it looks like, I just think they over forecasted, to be honest. Like this, I don't know. This is kind of wild and crazy. And where are we coming back? We just pulled back on the earnings play to 618 pullback level on this big swing. So I'm going to take a chance, go long AMD. That'll be my play. So I'm going to take a chance right here. There's my create order. Market. If I go, I'm going to go half a lot here and see what that looks like. So if we put a trade on, take profit, I'll just see if we come back into the gap here. So 151 to 155. Let me do a take profit and price. Let me see if we can fill a gap at 158. I don't know. That'd be my wishful thinking, but if I do a half a lot there, so my risk on the trade. I'm not going to put a stop loss in right now. I'm just going to kind of evaluate. If we drop another, $9 or $10, let's go down to 144 or 134 price. So I'm comfortable risking about $500 on this trade. Trying to go after more in profit. So I think that's fair. I'll do a half a lot on AMD, and then I'm going to do the opposite on Micron and see if I can, walk away with some net profit. So, all right, I'm going to take this trade. This is long AMD at market, so 144.80 fill. I might as well make this a little bit larger then if I can, somehow walk away with a couple extra dollars to the upside. And then downside, I'm just going to evaluate. I'm not going to put a stop loss in, but I will be checking and watching closely. So that might bite me in the butt. We'll find out. But I'm going to take off the stop loss for now and let this thing ride. If we go up and fill the gap, that's 158. I'm putting 160 in, but I'll take profit on that on my own. So I'm going to buy AMD after a earnings play and evaluate that from the week. And then I will pair that with Micron, which for 8cap does have a feed here. There's my Micron. And for Micron, I'm going to continue to look for a short. So I'll sell Micron, try to get down to this level at 105. And this will be another 0.5. This one's going to be a market sell take profit. If we get down to, if we make a fresh low at 104, oops. If we make oh, I guess I'm in the trade. Let's see if I can edit that one.
Oh no, it's in, buddy. It's
yeah,
in.
I know. Let me go to the trading tab here and try to modify this one. So AMD, Micron. All right, let me modify this. So here we go. So take profit. I'm going to take this down to 100. There we go. That way my stop or my take profit's at 100. That'd be a fresh level. That'd be a gap fill. Maybe 97.50. I'll change that again. 97.50. So we'll go 97.
Okay. So long AMD, short Micron. Those
Yep.
are your combo trades here. More
Yep.
pairs trading with
Yep.
stock. Awesome. Very cool. All right, Gary, you're up. We got
Are you
next
sure?
challenge.
Because we got still 900 stocks that maybe Chris can look into. Chris, what about another 900?
I mean,
stock?
I'll happily scan 7,000 if you want me to.
I know you would. All right. Sorry, Nick, you were saying?
I was just saying, Gary, you've got you're up. Which stock and also long or short? I mean, right now the market's super volatile. If you do get something that scares the market, the short side could be very sweet. But same thing for the upside. If you buy into something higher risk and it has a good day, as you think, if you do think that the dollar's coming down, that would suggest perhaps some better times ahead for higher beta names, tech stocks, things like that. Do you have a stock in mind today?
Yes, I am going to look at Tesla. Now, I've got a question
All right.
about the orders, right? Are we allowed to close out positions and then re-enter on the same one, not new, but close out, take profit, and then re-enter the game when the market's lower in the next couple of days? Is that something?
Yes. Yep. That's fair game. Any trades you want to do ahead of Friday's close, which is when
Okay.
the winner will be announced.
All right, cool. Because I'm up 600. I was up about almost 900 already on my Ethereum trade. So I'm going to hold on to that. I'm probably going to close out on that. But let's go back to the stock trade right here. So the stock trade, I'm going to possibly go ahead and enter. I'm looking at the market filling the gap. What I like about it is the structure again. 1, 2, 3, 4, and 5 down here. We had a false breakout. Market came back into the structure. We didn't get a retest of that, but it has broken up the new highs. So we're really starting to trend back up again. I think Tesla's going to start seeing some higher highs. There is some downside potential. So I am going to look to add. We've had 2 gaps right here in the move over the last 48 hours. So there's going to be potentially a retest of that level. But I think it's time to go ahead and start getting in right now. So what I'm going to do is I'm going to go ahead and buy with the let's go with let's see if I've got enough margin here. I think I do. Yeah, I'm gonna go with a buy with Tesla here, and I am gonna buy in at a lower rate as well. Price rejected, margin insufficient. Okay, sorry, I did over leverage on the previous trade. So what I'm gonna do is I'm gonna have to go with 1 for now, and I'll add on to this one a little later. There it is. Oh, still not. Okay, so that's what I thought. Let's go back here. Let's see if I can cash out a little bit on this. Don't want to cash out too much on this, but I'm going to go ahead and let's go ahead and take some profit on this.
So taking some profit on Ethereum, make room for Tesla.
Yep.
All right.
Make some room on Tesla. Now, let me see if I do a quantity change here. Should be able to protect position. Let's see here. No, that's not the one that's modify. Let's see here. I believe it is. Let me see if I close partial order. That's what it is. That's what I was looking for.
There you go. Yep.
All right. So I'm going to close out. Actually, I'm going to close out 15. So I'm going to go with 20, 15. So yeah, I'm going to go with 15. Actually, go with 25. My bad. I need more margin. So I'm going to close out with 25 on that.
Mm-hmm.
And let's see if it did close out.
Yep. Now you're down to 25.
Perfect.
Got it.
All right. So now what I'm going to do is I'm going to go with the Tesla. Let's go back with Tesla here. And let's do a buy on Tesla. And I'm going to do, let's see if I can get in if it's going to give me 4. I want to go in with 4. Nope, still too much. Let's go with the half that equity. Yep.
There you go. You're in.
All right, good. So that'll give me an opportunity. I think if Tesla does come back down south, I'm going to make some more profit on Ethereum. I'll go ahead and cash on Ethereum, and I'll get back on Tesla once again when it drops back down a little bit, a little lower. But I think we should get a little push. Now, this is going to really be my sort of trade for the news coming out, because I think we're going to get some volatility at 2 o'clock. And then depending on that, we'll either be a re-entry or be taking profit up here at the top.
All right, very cool. So we got little bit of semiconductors, we got Tesla, crypto, we got currencies, we got a little bit of everything here in the audience. I do want to just mention here before we get into challenge number 3, just a quick shout out to the sponsor, the head honcho of this event. It is the Trading Battle. If you've never been a part of one of these things or seen one of these things before, Gary and Chris are currently going head to head. Their P&Ls are being shown on the screen, and this profit, wherever it goes, or whoever wins the most profit, will be going to charity. We're streaming right now to my own YouTube channel, but also to the Trading Battle. I want to ask you guys a favor. If you're enjoying the show, let's help the Trading Battle get some more exposure on the internet. What they're doing is one of the coolest things for the trading community that I've seen in my years on YouTube. They're sponsoring traders to go head to head. It's for charity, tons of free education. They're bringing traders from all around the world. Let me just ask you guys to do us a quick favor. All of us here, Gary, I know, and Chris, you guys are big fans of the Trading Battle, what they're doing as well. Help us out. Make sure, go subscribe to the Trading Battle. Let's help get their YouTube channel some more exposure, big time. So with that said, real quick, we're going to do another transition, and we're right into challenge number 3 on the Trading Battle. Stick around. Here it comes. So this is a fun one. The sabotage trade is a trading battle classic where essentially Gary and Chris will get the chance now to pick for each other an asset that they've got to place a trade on. So a quick example would be if I were to give Gary Apple and he has to take a long or a short position, he can choose whether he wants to go long or short, but I get to choose the asset. Now, in this case, these two are going to be choosing each other's. So we're going back to the same order now where it's Gary's turn to go first. So with that said, Chris, you select which asset Gary's placing a trade on. It can be anything that you can trade on 8cap.
All right, Gary, I'm gonna throw Coinbase at you. You got to trade Coinbase on 8cap. So Coinbase has earnings tomorrow after market close. So this will be in the window of when our trades close. So you gotta pick an earnings play, pick a direction. I mean, in truth, I mean, it's a crypto related pair. I mean, the correlation between Bitcoin and Coinbase. So if you got a general direction on your crypto, then I'm sure Coinbase is going to follow along. But earnings, it's at least going to cause some movement, and that's what I'm going to get you to trade.
Yeah, well, thank you, Chris. This is actually really easy. You've made it really easy for me because we're at current support right now. Now, I would love it if you got your timing right a little bit there and got me down here below, but that's okay. I'll go ahead and buy up. It's a really simple decision for me right here. I'm going to be buying it, and we probably said go up to this area right here. I'm going to have to probably liquidate some more of my Ethereum here to get into that position. Yes, it is. I'm going to have to cash out on this one right here as well. So let's do this. Let's go ahead and free up some more margin. It's a pity because I'm going to make a crap load of money from this position, but I have to. I got aggressive on this position. So I'm going to go ahead and close out some more on this. Let's do 15 on that and then close out partial. So just taking some profits along the way. Again, it's short-term trading, right? This is what we're doing, right? The short-term trading. So now they'll give me some more opportunity here to buy in on this one. And I'm going to go ahead and actually double up on this because I really think this is going to be a good one. Let's see how much I can get in. So I'm always going to push the limitations here. Let's see if I can go into 20. I don't think I'm going to be able to buy in again on this one, but I think we should be good on, nope, rejection. I love it. I love it when I get rejected. It feels like my wife.
We're full margin trading here today, guys. We are maxing out margin in the name of charity.
Yes, we are. We are absolutely insufficient. All right, so I'm going to go with 5. I think 5 would be the right number here, and it is not. So let's go with 2, and I think we're going to be good with 2. Still not. Am I able to trade this one? It is on the. There should be 1. Still nothing. All right. So
what's your used margin show, Gary? If you're in your trading panel.
Let's see how much margin I do have left.
Okay, you're running fairly tight. With that used
Yeah.
margin, you're at 8,600 right now.
Yeah, I'm gonna have to loosen up a little bit more here on the Ethereum to
Okay.
get into that position, but let me do that. Let's do 5. Let's drop that down. This is what the margin is that I'm getting. My equities up here to 11, so I'm cashing in nicely on that. All right, let's try that. Let's go ahead and see if I can get this one in. Let's pull it down here, and let's go back to. Oh, sorry, I flipped it over. It's going to be Coinbase, and it's going to be this one right here. And we said we're going to be buying on this one. Let's fucking get in with the. Let's go with 2. So now let go a little bit. No, so it's still going to be 1. Nope. Looks like I might have to cut it down to 0.5. There we go.
All right.
I'm in.
There we go. He's in. All right. So just a heads up too. Let's just take a pause here before we jump into Chris's turn to do the sabotage trade. Gary is very positioned here for volatility to the upside, specifically in terms of equities, right? Tesla, Coin, both of these higher risk names, and Ethereum, right? All of these things generally benefit based on what you started today's show out with, Gary, which is your thesis of, I think the dollar's baked in. I think we're going to see some relaxation on the rate cut side. And that, of course, would jump all the prices of all 3 of your positions. So you're very, very much positioned for it. I'm very curious to see if that does play out. Now I guess we got to flip the script. So Chris, you're going to be trading something that Gary puts upon you. So Gary, what's your sabotage trade for Chris?
You know what? I'm going to give Chris the Canadian Swiss. And I know it's something that he's liking, but I think it's at very critical levels.
Yeah.
And I think it's, especially over the next couple of days. And with the news coming out today, I think Chris is going to have a hard time with this pair. But I know he's very talented in picking the right directions. Let's see if he can do it this time around.
All right. So CAD Swiss. So this is one of my favorites. I've been in this trade for a while. I'm currently sitting in positions that are as low as 64.80 and lower. My overall position has been rock solid. I got filled on this recent pullback, and I'm long on the CAD Swiss in my personal portfolio towards 68.50, and I'm staying long in this thing medium to long term all the way to 71.72. So I think what I'm seeing right now that I don't love is I'm seeing this potential indecision. I could see the CAD Swiss actually falling with some risk off trading. So Gary, will you give me a compromise and let me can stay consistent with this pairs trade stuff? So if I went short CAD Swiss, would you let me pair that with a long Aussie Swiss for charity?
Aussie, let me see Aussie Swiss. Let me just see the structure. Aussie Swiss.
They're both really similar, dude. They're both really similar.
Yeah, it's similar, but there is actually. That's that. You know what? Be honest with you. If I do that, that's really giving you a huge card to get out of jail free card.
I know, but that's the point.
That's huge, buddy.
I mean, I could just keep my mouth shut and just trade it on the sidelines and be like, look, Gary sabotaged, but I still made money.
You know what? So, I'm gonna be the good guy, and I'm gonna say go for it.
I figure when we're in a live session like this, you got to be nice, and you got to play to charity, right?
For charity, right?
Very
so
good.
I'm gonna be the nice guy. But
all right.
But after the session, you're down, man. You go.
Yeah. Okay.
All right. So you're going to be going short CAD Swiss, long Aussie Swiss.
Yep. I'm going to go short CAD Swiss here.
Another interesting thing, just a note on the CAD pairs, oil, I believe, is falling apart here today.
Yep.
Took out support levels at, I believe, 81 for WTI. I mean, oil's on the downside. Maybe one thing to quote on that is we had some light PMI numbers today. Again, baked into the next hour is all the conversation about how the Fed sees the latest round of economic data, whether or not this inflation problem is going to come in. And that's why we're positioning this trading battle right where it is. These guys are placing trades for charity. Again, the profits will go to charity ahead of FOMC. We've been getting their take on it as well as watching them place trades. So what better kind of content than live trading? So we're coming in just a few minutes out from finishing up the trading battle and now positioning into the big event. So again, Gary, you're exposed mostly for some softness from the Fed, some dovishness. Chris, you're just exposed for the Fed's got to do something exciting, and if they don't, nothing's going to move. So it'll be interesting. That's kind of a summary here of you guys' positioning. You can look how many orders Chris has got here on his screen. He's got a little bit of everything on there. And Gary, you're selective and specialized, I would say.
and massive trade sizes for Gary. I didn't know you went 20. Did you go 25 lots on Ethereum?
I went 50 first, my friend. This is come on. We can try to make money here.
Yeah, I know.
I like the way
right.
Chris has actually broken it down, and that's pretty much from a conservative, not really knowing exactly, and we don't really know. News is always going to surprise us in some way, right? But this is a good exercise to show traders that sometimes you have to hedge sort of your positions, and a lot of our trading that I do as well. We look at multiple currency pairs and specifically like New Zealand CAD, Aussie CAD. And sometimes we be long Aussie CAD, but short New Zealand CAD. And it's also to play the hedge, especially if you're picking up a lot of movement in the Aussie, New Zealand CAD and the Aussie CAD. We would then go ahead and try and position ourselves in the opposite direction on the New Zealand CAD, just to be able to pick up some profits on the other way around. So it's really important to know that trading this market doesn't necessarily have to be black and white. It's got a little bit of different strategies around a strategy, and it's good to have.
Yep. No, exactly right. And again, just spending time with you, Gary, over the years, I know you oftentimes will trade both with a bigger term trend as well as counter trend in the meantime. Gary, while Chris sorts out his orders and gets all set up, I have a question for you from the audience. Gold thoughts. We're getting so many people who are, of course, curious as always. I mean, all three of us spend probably half of our time just answering the question, what's up with gold? But I'm just curious, Gary, your thoughts on gold right now. I mean, again, if you do get softness from the Fed, that could help out the story for gold going higher. But is it overdone? And is this starting, to look like it has more room to pull back? What's the bigger term picture here for you?
Yeah. Now, gold and dollars has also been. We've seen the sort of similar rallies, but then gold's continued while the dollar corrected itself a little bit. I've spoken about this a lot of times. In fact, your session too, we've spoken about gold, and I love the way gold is set up structurally, because structurally it should correct itself. Now, the problem is that we have an internal structure, and this internal structure is going to create a little bit of support right here where it's trading. In fact, if I go ahead and pull up my FIPS on this, you'll probably see right about here it's just slightly higher. So we got a good level of support right here where the market's now trading back below. Now, this is a good sign for possible further downside moves. So what I'll be looking for is, does price stay above 2,332? If it does, we could go to the next sort of target, and that I'm going to look for internal structure on that. And that would mean that gold would go all the way up here to around about, we're looking at 2,500. Now, I know there's a big following that's been trading gold, and I've said, I'm more of a buy and a hold gold, physical gold, than I am spot trading it. But the gold price right now has potential to go up to 2,500. I'm waiting for gold to come down lower. I'm not a buyer in gold at this level. I'm looking for gold to come down to around about 2001, 2002, around that area. And then I would be a super big buyer in gold, because I see upside potential to 2,500.
Well, Gary, I have to give a testament to yourself from one of the times that we spoke previously. We spoke before this recent huge run in gold, and I remember you specifically saying that a return back to somewhere in the high 1800s to 1900s could be a point to load up. And sure enough, it came right down. And I remember when you said that, I was like, I don't know, gold looks like it wants to tap against 2000. And we were on the same page where we thought gold would go higher, but you made the point that you wouldn't be surprised if it gave you one more chance. So perhaps we see that one more chance again for gold. It does typically have these big cycles, and then they, much bigger than I even, ever expect them to. The big swings high and then the big pullbacks. But Real quick, guys, I want to also just follow up on where we are at here as we are coming to the end of our battle here, where we've set up everything. Gary, you've got the screen really quick. Can you just give us a trade panel update here, just so we can see all of your current positions as we kind of finish up here? So you've got your 3 trades. You've got Coinbase, you've got Tesla, and you've got Ethereum all long. He's the risk on guy today, guys. He's looking for the Fed to be accommodative. We'll see if that can play out here today. And again, very, very margined here, but it's for a good reason. We're trading for charity. So awesome. Gary, Chris, you're up in terms of current positionings. I know you've got a little bit more here. You've got 9 positions open. You're long the Aussie Swiss. You're short the CAD Swiss. Again, you're long Bitcoin. That's a new one. Did you just go long Bitcoin?
In there.
Oh, you snuck in a Bitcoin long when we weren't looking.
What?
Yep.
No, that's awesome. Short MU, long AUD. Is that
AMD.
No?
Yep. Advanced Micro Devices. Yep.
Oh, okay.
AMD.
So
that was the pairs trade with the semiconductors, and then
right.
Swiss yen, dollar yen are paired, euro yen, pound yen paired. Now my trades are very much in line with what's going to happen in a minute. So over the next hour, my panel here is going to be making all sorts of noise and ups and downs, and I'll be watching red and green all over the place. So I know that in the next 24 hours, there's going to be a lot of trades for me to manage, hopefully setting a, 2-to-1 stop, 2-to-1 reward to risk, or 1.5-to-1, things like that. I guess when those limits filled, which knows my profits will be larger. So I am playing volatility with a lot of these pairs trades. And so I know I'm putting myself in potential harm's way for the whipsaws, but I'm trying to keep it out of the way enough that we're not getting stopped out in the short term, but rather letting prices run for the next couple of days.
Yep. And guys, we are just as we are speaking, we're coming about 10 seconds here now. Chandler, not to jump scare you, but can you give us a breaking news as we come in very close to the event? We'll run a breaking news. Maybe. Can we? We can always trust Chandler to deliver. He's got all the media stuff. So we've got 2 o'clock just hit. Let's see how markets are reacting, of course, to the Fed funds decision. I assume it just came out as expected, and no surprises there. But remember, 2 o'clock is the number that comes out, the interest rate. But the bigger news and where things will move. So we got 5.5%, by the way, guys. So 5.5 came out as expected in terms of the Fed funds rate. The bigger movement will happen at 2:30, which is in about 30 minutes here. When that happens, you're going to hear from Jerome Powell. It's all about the forward-looking commentary from him. So again, just to reiterate, Gary is positioned mostly risk on. He's thinking, rate cuts could still be somewhere coming this year. I think in the market it's now, kind of starting to even think no rate cuts are coming. So if you get 1 or 2 or whatever a possibility, Gary's positions will fly. Coinbase, Tesla, Ethereum. At the same time, Chris is betting on volatility. He's looking for big movements here this afternoon, in which case, his hedge positions could be made to be very interesting. That's going to do it for the show here in terms of the trading battle. But before we end and before we outro, again, let me just give you some rule outlines here for the trading battle going forward. Friday is the last day. So at the end of Friday, these guys' positions, whoever has the most P&L or, God forbid, the least losses, will be crowned the winner of the trading battle here. This is trading battle number 6. I just want to say this is a for charity event that is set up and created by the trading battle. They've asked me to host, and these guys have been kind enough to come on with their time and do some trading for charity. I just want to say as we close this up, do us all a quick favor. We've got a link that we're going to drop here directly to the Trading Battles YouTube channel, where we are streaming this to live as well. If you're watching on my channel, you're watching on the A1 Trading YouTube channel, you're watching anywhere else, do us a quick favor. Go subscribe to the Trading Battle. Support what they're doing here. This is trading for charity. Come on, help us out. 1 sub each would just help us out tremendously in making sure that these continue and continue to bring trading talent from all over the world like Gary and Chris. Before we close out, Gary, you've got a YouTube channel. What's the best way for people to find out more from you if they want to learn more about what you do or find out more about your style?
Yeah. So yes, we do have a YouTube channel, tradersnetworkclub.com. Traders Network Club. But also we've got a website, tradersnetworkclub.com. And basically the best way to get a hold of us is there. You can see the website down below, tradersnetworkclub.com. Go to that website. We have online support if you need to. You can send an email to our support at tradersnetworkclub.com as well. And we have a variety of different products. Just as you've seen today, we do some short-term trading, which is fantastic. We've got different strategies we use to be able to implement it. And we run a good trading service that helps traders be able to get started in this market. We know how difficult it is. Chris, Nick, you guys know. I know for sure, when I started, how tough it is to become profitable and to be able to put your foot in the right direction initially. The biggest thing that traders fear is fear of loss, right? And so we have to get over that. And how we teach them how to do that is how to properly manage their risk in trading, so that they don't get upset or don't get to sort of like shell shocked when we have news announcements like this, because we should be able to trade through news announcements like that without fear in the market. And the only way to do that is to properly manage your risk. So go check out tradersnetworkclub.com.
Awesome. So tradersnetworkclub.com, best way to find Gary, and best way to connect with you, Chris. What's the, how can people find more information about what you do and about your trading style?
Yeah, I'm live quite a bit on YouTube, as well as joining the A1 trading team, Nick, a couple times a week. So best spot is just to catch me live on YouTube. And then once you're on with me, just ask to join my Discord channel. My Discord is Chris Pulver Trading, and that's the best place to find me directly. I also have links to some workshops that I do for small groups and individuals, also affiliate links to all the education, some robots, strategies, trading rooms, things I run privately. That's all my Discord. So free group to join. And if you want the extra attention, the extra time, the extra, live trading and services and things like that, it's all available in one-stop shop with my Discord. That's Chris Pulver Trading. You can follow me on YouTube as well. You can catch me with Nick and the team at A1 Trading.
Absolutely. Chris Pulver on YouTube. Find him there. And again, a big shout out to Gary and Chris for joining me here today for Trading Battle number 6. Guys, we'll keep you updated with your P&Ls. Best of luck to you. And again, feel free before the end of the trading battle to close your positions or to add to them, whatever you want to do. Maybe sneak another Bitcoin buy in there, Chris.
That's right.
Chris.
I'm loading up 50 lots, Gary.
You get a text later on today. Hey guys, I just went ahead and
by the way, I do have to say that Michelle in the background did add another $5,000 to Gary's account just because he over margined today. So I want to make sure everyone knows that.
little handicap. That's okay.
Yeah. I just say, you know what? When you run out of money, what do we say? Add more money. Right?
Add more money. Yep. Deep
That's
pockets.
Right.
Deep pockets.
That's right. So at the end of the Friday, whoever has the most profit, that profit will be generated and sent to charity, which is fantastic. And guys, thank you both for joining on the show here today. We'll let you go, and we'll speak back with you soon.
Fantastic.
Sounds good. Thanks, Nick.
All right. See you guys.
Thank you, guys.
Bye-bye.
All right, guys, that's going to wrap it up for Trading Battle. Trading Battle number 6. Again, please do us a quick favor as we close out the Trading Battle portion of the show. We jump into now the press conference and prep for that. Show keeps rolling. We're not going anywhere. The show is continuing on as we go right into the big event here today. And we'll all have to keep in mind Chris and Gary's positions. And again, watch out for any sneaky Bitcoin buys from Chris. You never know when he's going to drop a lot on Bitcoin. Anyways, that was a lot of fun, guys. And I just want to ask you a quick favor again. As I mentioned earlier, make sure to go subscribe to the Trading Battle, show some love, show some support. I'm a huge fan of what they do over there. And now it's time to get back in. Where's my hat? Hold on. To pirate theme, because here comes Jerome Powell. He's coming in. Okay, so I'm going to share my screen. We're going to pivot back into prepping for this. So just give me 1 second. We're going to... All right, guys, and we are back. Back to square one, I guess. It's like the whole stream just reset. That was super fun. I love doing those trading battles. That was my first time hosting a trading battle. What'd you guys think? Did I do okay? I gotta, oh, hold on 1 second. I gotta share my screen again with sound enabled. Okay. And we are good. Okay. Sound should be working. James, can you hit us? Very nice. Very nice. We're back. Okay. So again, we are coming in here just about 20 minutes to go. And we are going to see what Jerome Powell has to say. I want to take a look across the market, see how things are reacting so far. Of course, let me just reiterate, as we mentioned earlier, the Fed funds rate did come out 5.5%. That is as expected. But it's not about this number. A lot of people who are newer to trading might say, what the heck? Why isn't the market spiking one way or the other? Hold your horses, slow down, or I'm going to make you walk the plank. Okay? It's pirate theme in the month of May here on A1 Trading. So we're having fun with pirate hats, pirate ships, and all sorts of stuff. So the real piracy of this is that 5.5% was exactly as expected, right? The market doesn't move when things are not surprising. The market moves when things are surprising. The surprise could come during the press conference at 2:30. That's where some of our friends from Wall Street will start asking questions to Jerome Powell. You know, hey, is this inflation problem going to be something that means no rate cuts this year?
Pretty much in line with our
Right?
expectations.
Is it really in expectations? Because Jerome Powell's expectations earlier this year were rate cuts, and now that seems to be not so much the case.
We're making progress.
Right? So as we get closer to the press conference, I want to just take a look at charts, see what's going on. If we take a look at the dollar index first, the dollar index is slightly lower here. But remember, the movement is not on the rate, the Fed funds rate. 99.9% of the time, the market knows what this number is going to be before it actually comes out, because all traditional economics say, you know, what the Fed's going to probably do. What's bigger is this. So in terms of market reactions here, take a look at the dollar index. The dollar index is tagging resistance. And as we tag resistance here, again, you've got resistance, resistance, resistance around that 106.4 level. You've also got, however, though, a bigger picture upward trend on the dollar index that you've gotta pay close attention to. Big move up, consolidation, big move up, pausing at resistance. If you get something hawkish from the Fed, which is my opinion, this is where Gary and I differed on the show. Gary was pointing that he thinks dollar index has played its move and likely is going to retrace further. Fed's going to be, you know, continuing to stick to their rate cut plan. If that is the case, the dollar index, in my opinion, would need to see a break through that 105.5. I don't think you can really get bearish on the dollar index based on traditional technical analysis unless you see a failure at where we found key support. Look at these two green candles. Those are solid. Dare I say it? Is that a perfect candle? Can we do a perfect candle?
Perfect candle.
Perfect candle.
Right
Oh, that's
there.
one of my favorite ones. Okay. Perfect candle, but not quite a perfect candle. Now, let me show you what a perfect candle would really look like today. Perfect candle would look like this. Can we get another perfect candle?
Perfect candle. That green candle right there.
That would be a perfect candle for the dollar bulls. So in terms of what would need to happen, Fed would need to say, look, problematic, inflation, pump the brakes. It's not going anywhere, and the problem persists. Dre, thank you very much for the $2 donation to the stream. Is it lagging? Guys, we got stream lag today? I'm sorry for that. Yep. Fortnite. You know, I played Fortnite last night with my wife. My wife, she loves Fortnite like way more than me. I actually don't really like Fortnite that much, but my wife loves it. She can't get enough Fortnite. It's the weirdest thing. She's not even a gamer. That's the thing. Oh, wait, hold on. Where am I? There I am. She's not even really a gamer, but she started playing Fortnite with her brothers and sisters. She's got 4 brothers and sisters, so she's one of 5. And you know, they started playing Fortnite together. I jump in and I'm just like, this takes me back to my college days. Anyways, dollar index, again, getting back to my theory here about a potential perfect candle. I mean, there's a lot. I got to use the green marker because the green on this chart is crazy. The dollar index is so strong. again, what we're looking for would be either, if you're a bull, I think you probably want to see a break through these highs. If you're a bear, if you're somebody who is bearish on the dollar, this is my opinion, I think you want to see reaction from this top point does not make me a bear. Selling off through this low, 105.5, that makes me concerned for the bull case on the dollar. Okay. So I think path of least resistance for the dollar index is to the upside. I'm not betting, my whole account on a dollar breakout to the high side, but I'm saying I lean bullish on the dollar.
I'm going to put my whole life savings into this.
We're not going to do that, right? But I only play Rocket League. That's fun. But we're looking, generally speaking, for more upside on the dollar. That would be my bias. Now, what's giving me that bias? Is it just a hunch? No. Trading is all about probabilities, stacking odds in your favor. Okay. Any good pirate knows you can't just show up without a plan. You got to have a crew and a ship and all the sails in order, and you got to swap the poop decks, right? If you're going to be a good pirate, you got to come prepared. Same thing for trading. You got to be prepared. You got to have all the systems in place. You got to have all your risk management in place. You got to be disciplined. You can't be a wreck when you're trading. Any good trader, again, where's the bloody rum? Can't be trading when you got rum on the beach like Jack Sparrow, right? So,
excuse my drawing. I've been drinking.
20 rupees. Thank you very much for the donation, Raul. I appreciate it. Any amount, 24 cents. Yeah, but the dollar is expensive, so we appreciate any donation. Thank you so much. You don't have to donate whatsoever. Shout out, Raul. Yeah. Yep. No walking the plank for Raul. I don't know about the rest of you guys. Anyways, yeah. We're getting close here again to the press conference, about 15 minutes. We'll pull up the stream for you. Don't worry. We will have that coverage as soon as we have it. You guys will be able to see it. So here's the thing. In terms of current setups for me, I am still bearish the Russell as long as it stays there. Yep. Bearish the Russell. I have a short position on the Russell. I have a bullish position on the dollar via my Euro USD short. So let me show you my current positions that I've derived from the Edge Finder. I have a short on IWM. Oh, why am I not logged in? What happened to my login here?
Anybody else ever felt like the chart is talking to them like this?
It's because I have it open somewhere else. Hold on, guys. I got to find my trading view. Where have you gone? Well, that's my notes for the trading battle. Here's my trading view. This one was a liar. Let's get rid of that liar. Walk the plank. All right. So here's the real trading view. You can't have two trading views logged in, I guess. Okay, we're good. So let me show you current positions. I got IWM short. This one I've got to stop trailed. Let me go full screen here. So I'm short the Russell. Stops are just above this high. If we push higher on the press conference in any capacity, I will take profits on this Russell short. I'm floating $1,300 on this. Nice little hedge. I'm not going to lie. I do have other long positions on the stock market and some of my my position trading, but this was a nice little hedge. It captured a little bit of the downside move. We tagged a resistance point, tagged a downward trend line. Russell, remember, is small cap stocks. Small cap stocks, I think, are going to take it on the chin if you get rates staying higher for longer. Look at all these donations. Adam, thank you very much. Appreciate you. Let's get some claps for Adam. Wow. Thank you, Adam. Appreciate the donations today, guys. You really don't have to. I hope you enjoyed. I hope you really enjoyed the trading battle. I had so much fun doing that. Again, it was my first time hosting. I hope I did okay. I was a little bit nervous. And, I usually, my confidence goes away when I don't have the hat and sword. So I had to pull the hat and sword off to be all professional for the trading battle. So what's with the hat? What do you mean what's with the hat? This is my look every day. I just got my feather done. I got my feather done. So anyways, it's pirate theme in the month of May. I'm floating a profit on the Russell. On Euro USD, I'm short Euro dollar. Euro dollar, I'm at break even. I've been in this trade for several days. It's gone nowhere. The Euro has gone sideways on me. I entered it over here. So I went short right here, popped against me, but I'm still in the trade. I didn't get stopped out. 50% did end up holding. The 50% retracement level did hold. We've rolled over. I'd like to see follow through here today to the downside. Again, US dollar bullish. That's my base case for today. So we'll see. Raul, again for the 20 rupees, my friend. Thank you so much. NAS 100. Yeah, let's look at a couple different charts here. A couple things I want to knock out. I want to look at gold. I'd like to look at the NASDAQ. Euro. Again, I'm short, stop loss above the highs here. Let's take a look at the NASDAQ really quick, see where that's at. The NASDAQ's been all over the place today. And again, I think appropriately so. It's not moving a whole lot, even though you did get some economic data that came in not great. PMI data came out this morning, guys, and it was no bueno. So not good, because we had a couple things. We had JOLTS job openings came in a little bit light. But on top of that, you also had PMI numbers, manufacturing PMI numbers, which came out 50.3 last time. We saw expansion in the manufacturing sector. We saw contraction this time. In fact, let's pull this up on the Edge Finder, because we've got an Edge Finder. Why not use an Edge Finder? It's the best thing on the market that ever happened. Oh my gosh, guys. You're not even ready for what just joined the stream. You're not even ready. I don't think I'm ready. We're going to run a quick break. And then just after that, we are going to be joined by Frank Scallywag Khabibi. It's going to be a great time. And let's roll the break. We'll be right back, coming very soon into the data, or the press conference. So we'll be right back with Frank just after this.
Attention, A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right. He's here. He made it.
Hello, everyone.
It's Pirate Month here at A1 Trading. We got swords, we got hats, and I just want to say, Frank, you look great in that scallywag hat.
Thank you. Thank you so much.
So
it took a lot of convincing to put this on, but after a stern thinking about it, I eventually, tied it up.
Well, what I'm going to do is I'm going to tell my kids someday that this was Orlando Bloom as Will Turner. So
I don't even think I did it right, to be honest.
It looks great. Can we get a little applause sound effect for Frank's outfit? And I mean, we got swords today. We got a stream theme change. Wow, what a day. Again, press conference is 10 minutes out or less now. We're going to see some reactions from all over the place. I just want to ask real quick as we get closer. There's 962 people hanging out with us here live. If you're enjoying the show, smash the thumbs up button, or you're walking the plank, and I can't help you with that. So again, smash the thumbs up button, support the stream. Appreciate you guys. Frank, manufacturing PMI came in light today. After last time it excited the market. This time it kind of disappointed the market. Saw a little bit of a slide here. Now market's kind of stepping back. Is that just because we've got the FOMC meeting coming in, or the press conference in just a few minutes?
Well, maybe. I mean, it was mixed. ISM was lower. It was cooler than most analysts thought it would be. And then final manufacturing was higher, but overall there wasn't much of a change. And yeah, I guess it could be muted by whatever Powell's about to say. But, the fact that there's been pretty much a lack of volatility overall this week, it's kind of making you wonder, is this news necessarily going to move the market the way we want it to?
Yeah.
Honestly, I hope so, but I'm wondering, just from seeing how this week has gone, things are as expected, I guess. We didn't get a hike. No one expected a hike or a cut.
Yeah.
It was the same way that they've been talking about for all these months. But
It's been interesting, Frank, because, the stock market has seen some volatility, but the VIX has not really reflected it that much. Kind of a weird reaction. I do want to say that, you and I talked about this earlier on in the week and last week, this key level of resistance that did come into play. The NASDAQ sold off around 17,800, kind of happened across the stock indices as a whole. You saw the S&P 500 saw a bit of a sell pressure that came in there. And at the same time, we saw the Russell come down and the Dow come down. I mean, everything seems to be selling. But, do you think that Jerome Powell is going to come in hawkish today? And is that, bearings for us to potentially go back and retest the lows? I mean, if Jerome Powell comes out and basically says, hey, we just probably don't see rate cuts for a little while. If you were to say that, you think the S&P goes back to the lows?
Yeah, I do think if it's hawkish. However, I don't think he's going to be less or more hawkish than he already is. If you know what I mean. It's just his stance is going to be like, I'm going to say most likely the economy is strong and rates are where they need to be right now. Inflation is not where it needs to be, but they're fine with holding it where it needs to be for interest rates. And I don't think they're going to change much of the narrative as what they've been talking about for the past couple months now. So
yeah. Well, what's more interesting maybe, Frank, is that the market is now kind of adopting what they're saying. There was a period of time where they were like, we're going to stay where we're at. We're not, feeling the pressure to cut. And the market just said, oh, whatever. We don't need rate cuts, kept going. Now with yields, the 2-year yield, you pointed out to me recently, we just crossed over 5% on the 2-year yield. I mean, it's getting the market's attention, I think now, especially with price problems staying persistent. But some of the economic reads coming in light with that manufacturing PMI data. So, advanced GDP came out much lighter than expected. So potentially back on the table is that concept of stagflation before. Also, I just want to call attention. Thank you again to Future FX Trader. Thank you for sharing so much knowledge and also being as transparent as possible. Many thanks from London, Mohammed. Thank you very much, Mohammed. Very much appreciate you and your support to what we're trying to do here. Again, Frank, I think it will be interesting, not just for the indices, but also for gold. If you get stagflation, I guess, what's your thought on gold? Are you looking for long trades? Are you sidelined? What are you thinking?
Well, I was actually going to ask you a question, and I guess it pertains to gold. It's about the 2-year yield, but I think the fact that the yields are coming down off this interest rate decision is the reason why gold is up. Because gold was not really making any moves to the upside until the past hour or so. Yeah. So I was wondering if this move, if this decision to stay where they're at in rates is actually bearish for yields, or if it's a good sign for gold, or is it just this is the immediate reaction? Because right now I'm looking at gold, and I had an open trade on GDX for about a week, and I closed out yesterday. But gold is now sort of rebounding from those lows again. That sort of support level around 2,300. It dipped back below yesterday, but it's paired almost half of its loss from yesterday. So I don't really fully know where gold is going to go. I mean, geopolitical tensions are still a major thing, but you haven't heard much about any news on that front in the meantime. I think what it's going to be about is what Powell says. And right now, it seems like Powell is going to say, the same thing he's been saying. Stocks may continue to do fine in this high interest rate environment. And, we're fine with keeping rates where they are. Like, I feel like a broken record, but maybe keeping rates the same is bullish for things like gold and stocks and stuff.
Yeah. And that's the thing is, I think the market will probably be looking for confirmation. This is probably the most battleground spot confirmation that the plan is still to cut rates eventually. And no mention of, I think the most hawkish thing he could say, practical potential thing he could say, I think it's unlikely, but possible, is rate hikes are still a possibility if the inflation data does not start to cooperate with this pause that we're doing, right? So that, I think, is maybe what gets your dollar to break out through that 106.5 area. You know, if you're going to see a breakout substantially higher, you've got to see the Fed. I think I'm with you. You know, it's got to ramp up its hawkishness, not just repeat what it said over and over, which is, you know, we don't want to see inflation get out of control, but we also don't want jobs to slip. So
I'm hoping he says something new because I want that volatility.
Right.
It would be nice to see the market pull back further, the stock market at least. But you know, I saw in his statement, and the Fed's statement actually, that what they added was there's been lack of further progress, which we expected him to say, but this was in contrast to previous statements where he said, you know, we're seeing the progress we need, progress. But he also added that treasuries, they're sort of declining their positions on treasuries. So the cap was 60 billion. Now they've reduced that to 25 billion. So they're, I guess, in a way, less bullish on bonds. So as in the less bonds they buy, I guess it's the higher the yield may go.
Sure.
You can interpret that way, or you just figure that they're maybe just going on a less strict stance against interest rates, and hoping that inflation will come down as a result.
Yep, exactly. Ivan asked what's going on, guys, and if this was Chandler's idea. We are doing, for the month of May, it's Pirate Month. You missed the intro sequence, but we are sitting on the beach right now. We just parked the boat, and it is Pirate Month. That is our theme for the month, and why not? We just have fun with these streams anyways. So yeah, you know, it's like SpongeBob SquarePants. Yeah, we could put some SpongeBob stuff in here just because, again, it's Pirate Month. Anyways, again, we're awaiting the feed here. Chandler's got it pulled up. We're waiting for Jerome Powell to take the stand. As soon as he is on the stand, guys, we will have the stream here for you. Don't go anywhere. We'll pull it up as soon as we have it. I do also want to say, while we wait, today is the final day of the Edge Finder sale. We're doing 45% off. It's our biggest sale of the year, and today is the final day. We extended it one day just for this event. So if you have not picked up a copy, 45% off. Here's how you can get access. We're going to drop a link here in the chat as we're speaking in YouTube, or if you're watching this back at a later time, you can click the first link in the description of the live stream. Click that to send a message directly to someone on our staff. They can hook you up with a copy of the Edge Finder if you're a regular
has eased
show fan.
Substantially over the
Pick it up
past year,
there.
while the labor market
All right,
has
we're going.
remained strong, and that's very good news. But inflation is still too high. Further progress in bringing it down is not assured, and the path forward is uncertain. We are fully committed to returning inflation to our 2% goal. Restoring price stability is essential to achieve a sustainably strong labor market that benefits all. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings, though at a slower pace. A restrictive stance of monetary policy has been putting downward pressure on economic activity and inflation, and the risks to achieving our employment and inflation goals have moved toward better balance over the past year. However, in recent months, inflation has shown a lack of further progress toward our 2% objective, and we remain highly attentive to inflation risks. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. Although GDP growth moderated from 3.4% in the fourth quarter of last year to 1.6% in the first quarter, private domestic final purchases, which excludes inventory investment, government spending, and net exports, and usually sends a clearer signal on underlying demand, was 3.1% in the first quarter, as strong as the second half of 2023. Consumer spending has been robust over the past several quarters, even as high interest rates have weighed on housing and equipment investment. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. The labor market remains relatively tight, but supply and demand conditions have come into better balance. Payroll job gains averaged 276,000 jobs per month in the first quarter, while the unemployment rate remains low at 3.8%. Strong job creation over the past year has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years and a continued strong pace of immigration. Nominal wage growth has eased over the past year and the jobs to workers gap has narrowed, but labor demand still exceeds the supply of available workers. Inflation has eased notably over the past year, but remains above our longer run goal of 2%. Total PCE prices rose 2.7% over the 12 months ending in March. Excluding the volatile food and energy categories, core PCE prices rose 2.8%. The inflation data received so far this year have been higher than expected. Although some measures of short-term inflation expectations have increased in recent months, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are strongly committed to returning inflation to our 2% objective. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue the process of significantly reducing our securities holdings, though at a slower pace. Over the past year, as labor market tightness has eased, and inflation has declined, the risks to achieving our employment and inflation goals have moved toward better balance. The economic outlook is uncertain, however, and we remain highly attentive to inflation risks. We've stated that we do not expect that it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. So far this year, the data have not given us that greater confidence. In particular, and as I noted earlier, readings on inflation have come in above expectations. It is likely that gaining such greater confidence will take longer than previously expected. We are prepared to maintain the current target range for the federal funds rate for as long as appropriate. We're also prepared to respond to an unexpected weakening in the labor market. We know that reducing policy restraint too soon or too much could result in a reversal of the progress we've seen on inflation. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. We will continue to make decisions meeting by meeting. Turning to our balance sheet, the committee decided at today's meeting to slow the pace of decline in our securities holdings, consistent with the plans we released previously. Specifically, the cap on Treasury redemptions will be lowered from the current $60 billion per month to $25 billion per month as of June 1. Consistent with the committee's intention to hold primarily Treasury securities in the longer run, we're leaving the cap on agency securities unchanged per month, and we will reinvest any proceeds in excess of this cap in Treasury securities. With principal payments on agency securities currently running at about $15 billion per month, total portfolio runoff will amount to roughly $40 billion per month. The decision to slow the pace of runoff does not mean that our balance sheet will ultimately shrink by less than it would otherwise, but rather allows us to approach its ultimate level more gradually. In particular, slowing the pace of runoff will help ensure a smooth transition, reducing the possibility that money markets experience stress and thereby facilitating the ongoing decline in our securities holdings that are consistent with reaching the appropriate level of ample reserves. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thank you. Howard Schneider with Reuters. A question to follow up, if I could. Do you consider the current policy rate still, are you confident that it's sufficiently restrictive to get inflation back to 2%?
So I do think the evidence shows, pretty clearly that policy is restrictive and is weighing on demand. And there are a few places I would point to for that. You can start with the labor market. So demand is still strong, the demand side of the labor market in particular, but it's cooled from its extremely high level of a couple of years ago. And you see that in job openings. You saw it, more evidence of that today in the JOLTS report, as you'll know. It's still higher than pre-pandemic, but it has been coming down both in the Indeed report and in the JOLTS report. That's demand cooling. The same is true of quits and hiring rates, which have essentially normalized. I also we look at surveys of workers and, surveys of workers and businesses and ask workers, are jobs plentiful? And ask businesses, are workers plentiful? Is it easy to find workers? And you've seen that the answers to those have come back down to pre-pandemic levels. You also see in interest-sensitive spending like housing and investment, you also see that higher interest rates are weighing on those activities. So I do think it's clear that that policy is restrictive.
Sufficiently restrictive, I guess.
So I would say that we believe it is restrictive, and we believe over time it will be sufficiently restrictive. That will be a question that that the data will have to answer.
So as a follow-up, if inflation continues running roughly sideways as it has been, the job market stays reasonably strong, unemployment low, and expectations are anchored and maintained, would you disrupt that for—
Expectations are not anchored?
Or anchored.
Or anchored.
Stable, roughly. Would you disrupt that for the last half point on PCE?
I don't want to get into complicated hypotheticals, but I would say that, we're committed to retaining our current restrictive stance of policy for as long as is appropriate, and we'll do that.
Gina. Thanks for taking our questions, Chair Powell. I wonder, obviously, Michelle Bowman has been saying that there is a risk that rates may need to increase further, although it's not her baseline outlook. I wonder if you see that as a risk as well, and if so, what change in conditions would merit considering raising rates at this point?
So I think it's unlikely that the next policy rate move will be a hike. I'd say it's unlikely. Our policy focus is really what I just mentioned, which is how long to keep policy restrictive. You ask, what would it take? I think we'd need to see persuasive evidence that our policy stance is not sufficiently restrictive to bring inflation sustainably down to 2% over time. That's not what we think we're seeing, as I mentioned. But that's something like that is what it would take. We'd look at the totality of the data, answer to that question. That would include inflation expectations, and all the other data too.
Would that be like a reacceleration in inflation?
Well, I think, again, the test, what I'm saying is if we were to come to that conclusion that policy weren't tight enough to achieve that. So it would be the totality of all the things we'd be looking at. It could be expectations. It could be a combination of things. But if we reach that conclusion and we don't see evidence supporting that conclusion, that's what it would take, I think, for us to take that step.
Chris.
Thank you, Chris Rugaber at Associated Press. You didn't mention the idea that rates are at a peak for the cycle, and didn't mention the idea that it might be appropriate to cut rates later this year, as you have at previous press conferences. So has the Fed sort of dropped its easing bias? Where are you standing on that?
So on, let me address cuts. So obviously, our decisions that we make on our policy rate are going to depend on the incoming data, how the outlook is evolving, and the balance of risks, as always. And we'll look at the totality of the data. So I think, and we think, that policy is well positioned to address different paths that the economy might take. And we've said that we don't think it would be appropriate to dial back our restrictive policy stance until we've gained greater confidence that inflation is moving down sustainably toward 2%. So, for example, let me take a path. If we did have a path where inflation proves more persistent than expected and where the labor market remains strong, but inflation is moving sideways and we're not gaining greater confidence, well, that would be a case in which it could be appropriate to hold off on rate cuts. I think there's also other paths that the economy could take, which would cause us to want to consider rate cuts. And those would be, two of those paths would be that we do gain greater confidence, as we've said, that inflation is moving sustainably down to 2%. And another path could be, an unexpected weakening in the labor market, for example. So those are paths in which you could see us cutting rates. So I think it really will depend on the data. In terms of peak rate, I think really it's the same question. I think the data will have to answer that question for us.
Well, and could you just follow on the path where you might not cut? Is that, you mentioned that it would be inflation persistent. Is inflation, would that be the key data in making that decision, or could you expand a bit more on that? Thank you.
Again, we've set ourselves a test that for us to begin to reduce policy restriction, we'd want to be confident that inflation is moving sustainably down to 2%. And for sure, one of the things we'd be looking at is the performance of inflation. We'd also be looking at inflation expectations. We'd be looking at the whole story, but clearly incoming inflation data would be at the very heart of that decision.
Nick Timrose of the Wall Street Journal. Chair Powell, to what extent has the easing in financial conditions since November contributed to the reacceleration in growth? And do you now expect a period of sustained tighter financial conditions will be needed to resume the sort of disinflation the economy saw last year?
So I think it's hard to know that. I think we'll be able to look back, from down the road and look back and understand it better. If you look at, let's look at growth. Really, what we've seen so far this year in the first quarter is growth coming in about consistent with where it was last year. I know GDP came in lower, but you don't see an acceleration in growth. I mean, the thought would be that financial conditions loosened in December, and that caused an uptick in activity, and that caused inflation. Presumably, that's or tightening in the labor market. You don't really see that happening. What you see is economic activity at a level that's roughly the same as last year. So, what's causing this inflation? We'll have a better sense of that over time. I don't know that there's an obvious connection there, though, with the easing of financial conditions. In terms of tightening, you're right. I mean, rates are certainly higher now and have been for some time than they were before the December meeting, and they're higher, and that's tighter financial conditions, and that's appropriate given what inflation has done in the first quarter.
You've said in the past that stronger growth wouldn't necessarily preclude rate cuts. I wonder, would continued strength in the labor market change your view about the appropriate stance of policy if it was accompanied by signs that wage growth was reaccelerating?
So I just want to be careful that we don't target wage growth or the labor market. And remember what we saw last year: very strong growth, a really tight labor market, and a historically fast decline in inflation. So and that's because we know there are two forces at work here. There's the unwinding of the pandemic-related supply side distortions and demand side distortions, and there's also monetary policy, restrictive monetary policy. So I wouldn't rule out that something like that can't continue. I wouldn't give up at this point on further things happening on the supply side, either because we do see that companies still report that there are supply side issues that they're facing. And also, even when the supply side issues are solved, it should take some time for that to affect economic activity and ultimately inflation. So there are still those things. So I don't like to say that either growth or or a strong labor market in and of itself would automatically create problems on inflation, because of course it didn't do that last year. You ask about wages. We also don't target wages. We target price inflation. It is one of the inputs. The point with wages is, of course, we like everyone else like to see high wages, but we also want to see them not eaten up by high inflation. And that's really what we're trying to do, is to cool the economy and work with what's happening on the supply side to bring the economy back to 2% inflation. And part of that will probably be having wage increases move down incrementally toward levels that are more sustainable.
Rachel. Hi, Chair Powell, Rachel Siegel from the Washington Post. Thanks for taking our questions. You talked about needing time to gain more confidence that inflation is sustainably moving back down to 2%. It's May now. Do you have time this year to cut 3 times, just given the calendar?
Yeah, I'm not really thinking of it that way. What we've said is that we need to be more confident, and we've said, my colleagues and I today said that we didn't see progress in the first quarter, and I've said that it appears then that it's going to take longer for us to reach that point of confidence. So I don't know how long it'll take. I can just say that when we get that confidence, then rate cuts will be in scope, and I don't know exactly when that will be.
And with hindsight, are there any signs that you can look back on now, looking at the reports from January or February or March, that suggested something more worrying than just expected bumpiness?
Not really. So I thought it was appropriate to reserve judgment until we had the full quarter's data, until we saw the March data. And so take a step back. What do we now see in the first quarter? We see strong economic activity. We see a strong labor market, and we see inflation. We see 3 inflation readings. So I think you're at a point there where you should take some signal. We don't like to react to 1 or 2 months data, but this is a full quarter, and I think it's appropriate to take signal now, and we are taking signal. And the signal that we're taking is that it's likely to take longer for us to gain confidence that we are on a sustainable path down to 2% inflation. That's the signal that we're taking.
Yeah, Mr. Chairman, if I could, Steve Leisman, CNBC, if I could follow up on that. What particular areas were sort of temporary or blips in the inflation data in the first quarter? And what's the dynamic by which you expect them to work out in the coming months and quarters?
Yeah. So we will, we will put the thing under a microscope. I will say nothing is going to come out of that that's going to change the view. I think that, in fact, we didn't gain confidence, and that it's going to take longer to get that confidence. But confidence, I just think you know the story. What's happened since December is you've seen higher goods inflation than expected, and you've seen higher non-housing services inflation than expected, and those two are working together to sort of be higher than we had thought. And there are stories behind how that happened. I think my expectation is that we will, over the course of this year, see inflation move back down. That's my forecast. I think my confidence in that is lower than it was because of the data that we've seen. So we're looking at those things. We also continue to expect, and I continue to expect, that housing services inflation, given where market rents are, those will show up in measured housing services inflation over time. We believe that it will. It looks like that there are substantial lags between when lower market rates turned up and for new tenants, and when it shows up for existing tenants or for in housing services. So,
if I could just follow up, is there a bit of a contradiction in the idea that you are reducing quantitative tightening, which is sort of an easing, while you're holding rates steady at a restrictive rate to try to slow and cool the economy and inflation? Thank you.
No, I wouldn't say that. No, I mean the active tool of monetary policy is, of course, interest rates, and this is a plan we've long had in place to slow, really not in order to provide accommodation to the economy, but to be less restrictive to the economy. It really is to ensure that the process of shrinking the balance sheet down to where we want to get it is a smooth one and doesn't wind up with financial market turmoil the way it did the last time we did this, and the only other time we've ever done this.
Boris from Bloomberg. Two questions. First, simple one. Given the run of data since March, has the probability in your mind of no cuts this year increased or stayed the same? That's the first question. Second question. Chair Powell, you joined the board in 2012, and I'm sure you remember, as I do, what the jobless recovery was like. Lawyers, accountants, all kinds of highly qualified people who couldn't get jobs. And given your history there, I wonder if there's an argument for being more patient with inflation here. We have strong productivity growth that's helping wages go up. We have good employment. And so it seems to me there's a lot of hysteria about inflation. I agree, it's, nobody likes it, but is there an argument for being patient and working with the economic cycle to get it down over time? Thank you.
So on your first question, I don't have a probability estimate for you, but all I can say is that, we've said that we didn't think it'd be appropriate to cut until we were more confident that inflation was moving sustainably at 2%. We didn't get, our confidence in that didn't increase in the first quarter. And in fact, what really happened was we came to the view that it will take longer to get that confidence. And I think I think it's, the economy has been very hard for forecasters broadly to predict its path, but there are paths to not cutting and there are paths to cutting. It's really going to depend on the data. In terms of the employment mandate, to your point, if you go back a couple of years, our sort of framework document says that when you look at the two mandate goals, and if one of them's further away from goal than the other, then you focus on that one. It's the time to get back there times the times how far it is from the goal, and that was clearly inflation. So our focus was very much on inflation. And this is what we referred to in the statement. As inflation has come down now to below 3% on a 12-month basis, it's become we're now focusing the other goal, the employment goal, now comes back in to focus, and so we are focusing on it, and that's how we think about that.
Claire. Claire Jones, Financial Times. Thanks a lot for the opportunity to ask the questions. Just to go back to the answer before the previous one, it seemed to suggest that you think the likeliest path of inflation is one that's going to allow you to have a situation where rates are lower at the end of the year than they are right now. It'd be good if you could just confirm whether or not that's a correct reading. And the Q1 GDP print has led to some to start mentioning the term stagflation with respect to the US economy. Do you or anyone else on the FOMC think this is now a risk? Thank you.
Yeah, I'm not dealing really in likelihoods. I think there are paths that the economy can take that would involve cuts, and there are paths that wouldn't. And I don't have great confidence in which of those paths. I think I would say my personal forecast is that we will begin to see further progress on inflation this year. I don't know that it will be sufficient. I don't know that it won't. I think we're going to have to let the data lead us on that. In terms of your question, your second question was stagflation. I guess I would say I was around for stagflation, and it was 10% unemployment. It was high single digits inflation. Right now we have and very slow growth. So right now we have 3% growth, which is pretty solid growth, I would say, by any measure, and we have inflation running under 3%. So I don't really understand where that's coming from. And in addition, I would say most forecasters, including our forecasting, was that last year's level of growth was very high, 3.4% in, I guess, the fourth quarter. and probably not going to be sustained and would come down. But that would be our forecast. That wouldn't be stagflation. That would still be to a very healthy level of growth. And of course, with inflation, we will return inflation to 2%, and that won't be. So I don't see the stag or the inflation actually.
Michael McKee from Bloomberg Radio and Television. The vice chair of the FOMC said recently that he's willing to consider the idea that potential growth has moved up. And of course, he's Mr. Potential Growth, our star. Do you share that view? And would that imply that maybe policy isn't tight enough?
So I think I would take that question this way. We saw a year of very high productivity growth in 2023. And we saw a year of, I think, negative productivity growth in 2022. So I think it's hard to draw from the data. The question is, will productivity run? There are two questions. One is, will productivity run, persistently above its longer run trend? I don't think we know that. In terms of potential output, though, if that's a separate question. We've had what amounts to a significant increase in the potential output of the economy that's not about productivity. It was about having more labor, frankly, both through, in 2023, both through participation and also through immigration. So we're very much like other forecasters and economists getting our arms around what that means for potential output this year and next year and last year for that matter too. So I think in that case, I think you really do have a significant increase in potential output, but you've also got you've got more supply, but those people also come in, they work, they have jobs, they spend. So you've also got demand. So it may be that you get more supply than you get demand at the beginning, but ultimately it should be neither inflationary nor disinflationary over a longer period.
Well, you said earlier that at this point, you're not really considering rate increases. If growth is higher, but you're not considering rate increases, does that imply that you're more worried about causing the economy to slow too much than you are about inflation taking off again?
No, I think we believe our policy stance is in a good place and is appropriate to the current situation. We believe it's restrictive. And, our evidence for that I went over earlier. You see it in the labor market, you see it in inflation-sensitive spending, where demand has clearly come down a lot over the past few years. And that's more from monetary policy, whereas the supply side things that are happening are more on the supply side. So that's how I would think about it.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. So GDP growth is about 2%. Inflation, employment is about 4%. It feels a lot like a steady state, and we have 3% inflation. So if the data remains the same that you're seeing, and I know you said you don't see a rate hike, but it stands to reason that you would need a rate hike to get from 3 to 2% inflation. So was there any discussion about a rate hike in today's meeting? And are you satisfied with 3% inflation for the rest of the year?
Well, of course, we're not satisfied with 3% inflation. 3% can't be in a sentence with satisfied. So we will return inflation to 2% over time, but over time. And we think our policy stance is appropriate to do that. So if we were to conclude that policy is not sufficiently restrictive to bring inflation sustainably down to 2%, then that would be what it would take for us to want to increase rates. We don't see that. We don't see evidence for that. So that's where we are.
Was there a discussion about a rate hike at all?
So the policy focus has really been on what to do about holding the current level of restriction. That's part of the policy. That's where the policy discussion was in the meeting.
Yeah, I wanted to follow on the 3%. Is there a time frame of persistent inflation that would trigger a rate hike?
There isn't any rule. You can't look to a rule. These are going to be judgment calls. Clearly, restrictive monetary policy needs more time to do its job. That is pretty clear based on what we're seeing. How long that will take and how patient we should be, it's going to depend on the totality of the data, how the outlook evolves.
Victoria. Hi, Victoria Guido with Politico. You've talked about your commitment to being apolitical and nonpartisan, and I was just wondering, given that it's an election year, is the bar for rate changes higher close to an election? And similarly, is there a significant economic difference between, starting to cut in, say, September versus December?
So we're always going to do what we think the right thing for the economy is when we come to that consensus view that it's the right thing to do for the economy. That's our record. That's what we do. We're not looking at anything else. It's hard enough to get the economics right here. These are difficult things. And if we were to take on a whole nother set of factors and use that as a new filter, it would reduce the likelihood we'd actually get the economics right. So that's how we think about it around here. And, we're at peace over it. We know that we'll do what we think is the right thing when we think it's the right thing, and we'll all do that. And that's how everybody around here thinks. So I can't say it enough that we just don't go down that road. If you go down that road, where do you stop? And we're not on that road. We're on the road where we're serving all the American people and making our decisions based on the data and how those data affect the outlook and the balance of risks.
And then is there a significant difference between, whether you start in, say, September versus December?
There's a significant difference between an institution that takes into account all sorts of political events and one that doesn't. That's where the significant difference is. And we just don't do that. I mean, you can go back and read the transcripts for this is my fourth presidential election here. Read all the transcripts and see if anybody mentions in any way the pending election. It just isn't part of our thinking. It's not what we're hired to do. If we start down that road, I don't know how you stop. So.
Thank you, Chair Powell. Question about the labor market. You've mentioned a few times that the labor market is normalizing. Certainly today's JOLTS data suggested that things are kind of getting back to pre-pandemic levels. One thing that hasn't normalized is wage growth, which is still quite a bit stronger than before the pandemic. I wonder if you can share your analysis of why that's happening. Is it a lagging indicator or something else going on?
So I think if you go back to where wage increases peaked a couple, 3 years ago, essentially all wage measures have come down substantially to that. But they are not down to where they were before the pandemic. They're still roughly a percentage point higher. And we've seen pretty consistent progress, but not uniformly. And you'll note the ECI reading from Tuesday was expected to have come down, and essentially it was flat year over year, I think roughly. So yeah, I mean, that part of it is bumpy. And again, we don't target wage increases, but in the longer run, if you have wage increases running higher than productivity would warrant, and then there will be inflationary pressures. Employers will raise prices over time if that's the case. So we've seen progress. It has been inconsistent, but we have seen a substantial decline overall. But we have ways to go on that.
Scott. Nancy. Sorry. Hey, Chair Powell, Nancy Marshall-Genzer from Marketplace. You mentioned consumers, and consumers are feeling the weight of interest rates right now. Mortgage rates are up, as are rates for car loans, credit cards. People looking to borrow are very discouraged. That's reflected in their views on the economy. What would you say to them?
Well, the thing that hurts everybody, and particularly people in the lower income brackets, is inflation. If you're a person who's living paycheck to paycheck and suddenly all the things you buy, the fundamentals of life go up in price, you are in trouble right away. And so with those people in mind in particular, what we're doing is we're using our tools to bring down inflation. It will take some time, but we will succeed, and we will bring inflation back down to 2%, and then people won't have to worry about it again. That's what we're doing, and we know that it's painful and inconvenient, but the dividends will be paid will be very large, and everyone will share in those dividends. And we've made quite a lot of progress if you can think about it. I think headline core PCE peaked at 5.8. Now it's at Anyway, headline peaked at 7.1. Now it's at 2.7. Don't want to get that wrong.
No, you don't. Quick follow-up. Are current interest rates really doing that much, though, to fight inflation right now for those consumers?
Yes, I mean, I think that restrictive monetary policy is doing what it's supposed to do, and it's also in this case unusually working alongside and with the healing of the supply side. That was different this time was that a big part of the source of the inflation and the reason why we're having this conversation is that we had this supply side kind of collapse with shortages and bottlenecks and all that kind of thing. And this was to do with the shutting down and reopening of the economy and other things that really raised demand. So many factors did that. So I think now you see those two things working together, the reversal of those supply and demand distortions from the pandemic and the response to it, along with restrictive monetary policy. Those two things are working to bring down inflation, and we've made a lot of progress. Let's remember how far we've come. And we have a ways to go. We've got work left to do, but we're not looking at the very high inflation rates that we were seeing 2 years ago.
Courtney Brown from Axios. Thanks for taking our questions, Chair Powell. I wanted to follow up on something you mentioned earlier on housing inflation. There's kind of been this long-awaited disinflation in shelter that still hasn't arrived. So I guess two questions. How do you explain the substantial lags between some of the private sector data we're seeing and the government data? And how confident are you that rents will be helpful on the inflation front in the coming months?
So essentially, there are a number of places in the economy where there are just lag structures built into the inflation process, and housing is one of them. So when you have when someone a new person goes to rent an apartment, that's called market rent, and you can see market rents are barely going up at all. The inflation in those has been very low. But it takes, before that, they were incredibly high. They sort of led the high part. So what happens is those market rents take years, actually, to get all the way into rents for tenants who are rolling over their leases. Landlords don't tend to charge as much of an increase to a rollover tenant for whatever reason. And what that does is it builds up a sort of an unrealized portion of increases when there have been big increases. And what happens is, it's complicated, but the story is it just takes some time for that to get in. Now, I am confident that as long as market rents remain low, this is going to show up in measured inflation, assuming that market rents do remain low. What will be the exact timing of it? I think we've learned that the lags are longer. We now think significantly longer than we thought at the beginning. And so confident that it will come, but not so confident in the timing of it. But yes, I expected that this will happen.
Thanks.
Nick Jasinski.
Thank you, Chair Powell, for taking the questions. This is Nicholas Jasinski from Barron's Magazine. It seems that over the past 3 or 4 years, economies and central banks in developed markets at least have been on more or less the same trajectory, easing during the pandemic, fighting inflation with restrictive policy on the way out. Feels like that may be ending in 2024 based on some of the economic data from Europe and the US and Japan and statements from those central banks as well. So my question is, what considerations or risks does a period of more divergent global economic trajectories and central bank policies present for the FOMC?
So that you're right. I think that may happen. And you know that we all serve domestic mandates, right? So I think the difference between the United States and other countries that are now considering rate cuts is that they're just not having the kind of growth we're having. Their inflation is performing about like ours or maybe a little better, but they're not experiencing the kind of growth we're experiencing. So we actually have the luxury of having strong growth and a strong labor market, very low unemployment, high job creation, and all of that. And we can be patient, and we'll be careful and cautious as we approach the decision to cut rates, whereas I think other jurisdictions may go before that. In terms of the implications, I think obviously markets see it coming. It's priced in now, and so I think the markets and economies can adapt to it. And I think we haven't seen, in addition for the emerging market economies, we haven't seen the kind of turmoil that was more frequent 20 years ago, 30 years ago. And that's, I think, partly because emerging market countries, many of them have much better monetary policy frameworks, much more credibility on inflation. And so they're navigating this pretty well this time.
Jennifer.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. You sort of backed away from the notion that the economy would need to encounter pain for inflation to come back down. But given sticky inflation data in the first quarter, can disinflation still happen along a relatively painless path for the economy? Or is some softening in the labor market and the economy likely needed to bring inflation back down?
So you're right. I think we thought, and most people thought there would have to be probably a significant dislocations somewhere in the economy, perhaps the labor market, to get inflation all the way down from the very high levels it was at the beginning of this episode. That didn't happen. That's a tremendous result. We're very, of course, gratified and pleased that hasn't happened. And if you look at the dynamics that enabled that, it really was that so much of the gain was from the unwinding of things that weren't to do with monetary policy, but the unwinding of the distortions to the economy, supply side problems, and also some demand issues as well. The unwinding of those really helped inflation come down. Now, as I've said, I'm not giving up on that. So I think it is possible that those forces will still work to help us bring inflation down. We can't be guaranteed that that's true, though. And so we're trying to use our tools in a way that keeps the labor market strong and the economy strong, but also helps bring inflation back down to 2% sustainably. We will bring inflation down to 2% sustainably. We hope we can do it without significant dislocations in the labor market or elsewhere.
And speaking of dislocations in the labor market, in terms of cutting, you said if there were weakness in the job market, that could be a reason to cut rates. So if the unemployment rate were to tick above 4%, but inflation not back down to your 2% target, how would you look at that? Would the unemployment rate popping back above 4% catch your attention?
I said an unexpected weakening is the way I characterize it. So, and I'm not going to try to define exactly what I mean by that, but it'd have to be meaningful and get our attention and lead us to think that the labor market was really significantly weakening for us to want to react to it. A couple of tenths in the unemployment rate would probably not do that, but would be a broader thing that would suggest that it would be appropriate to consider cutting. And I think whether you decide to cut will depend on all the facts and circumstances, not just that one.
Chair Powell, thanks for taking the question. Kyle Campbell with American Banker. You've said that broad and material changes are needed for the Basel III endgame proposal, and you've mentioned that a reproposal is something that's on the table. As you've had more time to sort of sit with the public commentary, process that, and understand the options available to you, do you have a better sense of whether a reproposal will be necessary? And do you have a timeline in mind for when some sort of movement will be made on that front, either a reproposal or a move to finalize?
So let me start by saying that the Fed is committed to, completing this process and carrying out Basel III endgame in a way that's faithful to Basel and also comparable to what the other large comparable jurisdictions are doing. We haven't made any decisions on policy or on process at all. No decisions have been made. I'll say again, though, if we conclude that reproposal is appropriate, we won't hesitate to insist on that.
And then do you need to resolve issues with the capital proposal in order to advance other parts of the regulatory agenda, or do you expect to continue to make progress on those other agenda items?
There's no mechanical rule in place there, but I would say that the Basel III process is by far the most important thing, and really is, I think, occupying us at this time in terms of what we're moving ahead with.
Let's go to Mark for the last question.
Thank you, Mark Hamrick with Bankrate. Mr. Chairman, what can you tell us about the approach that you take with your role in the sense of trying to achieve consensus? which you recently identified as a priority, while allowing for a range of views or even dissent. We don't see many dissenting votes in the official statements, even when more spirited discussions are noted in the minutes after the fact. How do you avoid groupthink and avoid a higher risk of a policy mistake? Thank you.
So I think if you listen to, and you all do, listen to my 18 colleagues on the FOMC, you'll see that we do not lack for a diversity of voices and perspectives. We really don't. And it's one of the great aspects of the Federal Reserve System. We have 12 reserve banks around.
Thank you, Mark Hamrick with Bankrate. Mr. Chairman, what can you tell us about the approach that you take with your role in the sense of trying to achieve consensus, which you recently identified as a priority, while allowing for a range of views or even dissent? We don't see many dissenting votes in the official statements, even when more spirited discussions are noted in the minutes after the fact. How do you avoid groupthink and avoid a higher risk of a policy mistake? Thank you.
So I think if you listen to, and you all do, listen to my 18 colleagues on the FOMC, you'll see that we do not lack for a diversity of voices and perspectives. We really don't. And it's one of the great aspects of the Federal Reserve System.
I think the sound went way out.
Country where they have their own economic staff, not the people who work.
It's a little quiet now.
So each reserve bank has its own culture around monetary policy and its own approach and that kind of thing. It guarantees you a diversity of perspectives. So I think that the perspectives are very diverse, but and it from the obvious, gender and demographic ways, but it also we have more people who are not PhD economists. So we have people from business and law and academia and things like that. So I think you actually do have quite a good diverse perspective. I think all of us read these stories about a lack of diversity, and we look around the room and say, I don't understand. I really don't understand what they're talking about. So, but I get the question though. Thank you very much.
The chairman of the Federal Reserve. That news conference ended almost as soon as it started. The Fed chair thinks we're restrictive. Here are the scores.
I think that's it, huh? We made it to the end.
That's it. What did you think?
I shorted the Russell again during that. I poked this out inside of the Discord. I'm short the Russell again. I didn't really see anything or hear anything that was incredibly dovish. Also didn't really see anything or hear anything that was incredibly hawkish. Again, kind of mixed in terms of what we saw there. What do you think, Frank?
It sounded like they were really trying to press him, and this time more so than other times, where they wanted to know what his mindset was on, well, you thought 3 this year, now what do you think? And he was like, well, it depends on the data, like stuff like that. He wouldn't answer a question, which is strategic, but it kind of goes to show that his stance, where he was like, we have projected 3 rate cuts, and now they're saying they have to wait. I mean, we're getting towards the middle of the year in a couple months. So in the next few months, if it's still the same narrative, are we still going to see 3 rate cuts? Or are we going to see 1? He's going to have to give an answer at some point.
He seemed to have shot down the idea of 3 rate cuts. He said that at that time, it looked like 3 rate cuts. And then he mentioned he doesn't think that that's still like practical. So I think, the market's okay. The market's like, okay, so not 3. Everybody's on the same page with that. But then he definitely avoided the question of, is there a possibility of, when the guy asked him, was there a discussion of rate hikes? He didn't answer no to that. I noticed he didn't say outright, no, we didn't talk about rate hikes. Like, that's not in our conversation. He just said that, we think it's sufficiently restrictive for now. So I don't know. It was, there was some dovishness in it too. I think, if you're somebody looking for a reason for the market to rip, you could have pointed out that, he didn't come out swinging with rate hikes. and that he pointed to progress. And, I don't know. It was very mixed, Frank, because there was also when he talked about jobs, right? When he talked about jobs, somebody asked, would a 4% handle freak you out about the other side of the mandate? And he kind of said no. He kind of was like, no, a 0.1% or a couple tenths of a percent is not going to change everything for us either. So I don't know. I feel like there was just a very, I would argue that there was a lot in there for people who think he sounded hawkish to actually say, yeah, he kind of looked hawkish. I think there was a good mix.
Yeah, I agree. I think hawkish too. Mixed, like you say, but it felt more hawkish leaning now that, the sort of narrative he's been going with this changed a little bit, although what he's saying live in front of an audience is not, it's very cryptic. So it's hard to tell what he's really trying to say.
I feel like this summary was like, we think we're restrictive, most likely, but we're going to watch it close, which is sort of leaning on more hawkish, I would say. But then again, market's up. So why did it pop? Maybe the argument is just people kind of thought it was going to be even more hawkish than it was. Maybe that's why market is up right now. 1.10% on the S&P, Nasdaq's up 1.27, Dow is up 1.27. Maybe the market thought it was going to be more hawkish. Maybe he was expected to say there's a chance we hike rates again. I don't know.
Yeah, I guess we'll find out tomorrow when there's more news.
Yep, we've got more data coming the rest of this year or two, but the rest of this week. Guys, it's been a long day. We've been streaming for nearly 4 hours. So, Frank, thanks for joining me on the stream. I think we're going to call it good there. It's been a long day. So, with that said, Frank, thanks for coming on, and we'll see you next time.
Sounds good. Thank you.
All right. See you, Frank. Guys, last call. This is officially it. We are shutting down the sale here just shortly in about an hour. This is the last call. If you're a regular stream viewer, just a heads up, if you still want a copy of the Edge Finder, it is currently 45% off. And this is the official last call. Signing off, 45% off. If you don't have a copy of the Edge Finder, again, this is fair warning. When this sale ends, this is the biggest discount we do all year long. We're celebrating 2 years since we launched this product. And if you've missed the sale up to this point, let me just give you fair warning. At the end of the day, the price is going back to normal. And if you haven't gotten it, again, you'll miss out on several hundreds of dollars discount. Again, this is a big celebration to celebrate 2 years since we launched the product. Do not miss the discount. There's the link. We just dropped it in the chat. Boom, bam, there it is. Take advantage. And with that said, guys, we will see you back on the next one. Have a great rest of your day. Thanks for joining us on today's show.
Inflation.
Thanks again for watching today's show. Our goal at A1 Trading is to share free value to you, our audience, through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more, lest ye walk the plank. Join our crew as we head out to go long on gold. See you next time.